fresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the Coronavirus Job Retention and Self-Employment Income Support Schemes. For information, go to gov.uk/business-support now.
Which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Certainly we've got to put a floor under the economic carnage.
Markets didn't believe the coronavirus would take down the world economy.
Finance.
The sellers are not necessarily finished, but quite exhausted.
Investment.
That's the reality that we have to settle ourselves to. This is the start of a depression.
We're going to have a bounce back when everything is open. The question is, what is the shape of the economy from there?
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Coming up on the program, Dr. Fauci sending a warning on reopening too soon, China sealing off cities nearing North Korea, and Fed Chair Jay Powell taking center stage. Live on Bloomberg Radio, here's your Wednesday morning price action. Equity futures higher by 17 points. We bounced back from yesterday's losses, up 0.6% on the S&P 500. In the bond market, a lot of supply this week. Treasury yields coming in another basis point or two on a 10-year. You'll yield 0.66% on a 10-year maturity in the Treasury market. And to round things out for you in foreign exchange, the euro advancing a little more than 0.1%. A stronger euro there, a weaker dollar against the bulk of G10. Alongside Tom Keene, I'm Jonathan Farrow, together with Lisa Abramowitz. You are listening to Bloomberg Surveillance. Front and center, Mr. Keene, the chairman, just a few hours away.
No question about it. The major event of the day. And I think there is a character here, John, that he's speaking to Adam Posen and the Peterson Institute. Those are the kind of speeches, it's a think tank, even if it is virtual, they're the kind of speeches where they're either a major yawn, I doubt we'll get that, or there can be some real insight given. So I'm really looking forward to the speech. He's got to speak about negative rates. John, you saw that red headline on the Bloomberg. I mean, it was stunning. United Kingdom, 2-year gilt, negative rate. I mean, welcome Governor Bailey to the show.
Yeah, and I think there's going to be a lot of pushback on negative interest rates. That question no doubt will come out, and I welcome the fact that we're going to have a former central banker sitting in front of Chairman Powell asking the questions after he's made his initial address.
Socially distant.
It's going to be virtual, Tom. It will be virtual. I also understand, Lisa, we'll be taking this live on Bloomberg Radio and on Bloomberg TV.
Yeah, that's 9 a.m. Wall Street time. And it really will be interesting because markets are still pricing in negative interest rates. Also today, something that I'm watching, 10:30, we get EIA's weekly crude oil inventory report. Oil prices have actually been climbing, and there are signs that stockpiles are starting to decline in key areas in the U.S. Also, and you mentioned this, John, this is important. 1 p.m., the U.S. is selling $22 billion of 30-year notes. Yesterday, sold 10-year notes at a record low yield, even though the sizes of the auctions are getting bigger, John.
And a lot of demand there too. Tom, I think this is absolutely critical, and it's important Lisa brings it up. A lot of Treasury issuance is coming into this market. Now, this is an observation about what's happened, not a judgment about the future, but just observing what's happened. This market has taken it down pretty well so far.
Yeah, and again, with futures higher today, the resilience here, it's interesting, John, in every interview, even with, say, Ian Bremmer talking about, international relations, everybody circles back to this tech ascendancy in this nation, and that's what's holding the markets together.
So far, a little bit of a breakdown yesterday, which we'll be discussing through the programme. We'll catch up with Priya Misra of TD Securities on the rates market ahead of the chairman's address a little bit later today. We begin this programme with Jack Ablin of Crescent Wealth Advisors, the Chief Investment Officer. Jack, I'll start with a simple one for you. What do you want to hear from the chairman in 2 hours' time?
Yeah, I want to hear, obviously, that he recognizes the issues, but that he continues to pledge to not push rates into negative territory.
Jack, that was too short an answer for radio.
The country. Yeah. Sorry,
Jack, that was too short an answer for radio. I mean, we've got to have longer answers so we can pause here. Jack, I mean, the chairman has a huge mandate today, and part of that mandate is his new stardom. John brought this up the other day. I mean, basically, he's the most popular guy in Washington. How does he play that card today?
Yeah, I think that, he has certainly been very responsive to market forces after his, fourth quarter 2018 gaffe. But I think that he does need to be that last line of defense against negative rates. And I think the fact is that U.S. rates have been consistently higher than the rest of the world, and I don't see a reason for negative rates in the U.S. I think, risk-taking is actually, at least right now, pretty well at hand.
So why is the market pricing in negative rates?
I think they're looking around the world, and they see 17 trillion or so of negative rates worldwide, and I think they'll look at perhaps this is that tidal wave or at least tide that could push U.S. rates negative. But I think it's a very, very awkward situation for a regulatory body that is designed to prevent runs on banks. And if cash under the mattress yields more than money in the bank, that's a dangerous place to be.
Jack, do you think that the Fed would rather buy stocks than take rates negative?
You know what? Who knows? They're getting pretty friendly with BlackRock these days. Maybe someone over there has introduced them to the spider. I don't know.
I'm not privy to these conversations, Jack. But I don't know if Larry Fink is on the call to Mr. Powell saying, "I think it's time to buy the spider ETF." Look, let's get serious about what's happening here. At some point in the next few years, maybe in the next few months, someone at the Federal Reserve wakes up and realizes, even with interest rates at zero, the monetary policy is too tight because where inflation is. And I think the risk is here, and I don't expect it to come from the core of the FOMC. It is likely at some point a peripheral member of the Federal Reserve is going to wake up one day, see where inflation is, feel like zero's too tight, and start to come around to the idea they should be doing something else. I don't think they should be doing it, Tom. I'm just saying that I don't think we should totally dismiss the conversation, because I think at some point in the next few months, if inflation drops aggressively, you will hear that voice. It will come.
You sound like a Brit with a legacy of the 50s, the 40s, and the 30s, even back to Clement Attlee, where this was germane about wage reduction, folks, which is the heart of the matter. We're fortunate to have Jack Ablin with us, who can do the math. Jack, Irving Fisher, 1,000,000 years ago, it's all linked together. What's it mean for the discount rate of the financial system of the Pharaoh scenario and what does that mean for equities?
Sure. I think obviously the biggest uncertainty surrounding equities is, how long is this economic coma going to last, and what does that really mean for future cash flows? And if you believe, as I do, that stock prices are simply the discounted present value of future cash flows, I took comfort in saying, okay, let's assume we eliminate 2020 cash flows, eliminate 2021 cash flows, and then resume in 2022 even from a discounted cash flow basis, you're looking at around 11% decline. So, we have to keep in mind that equity investing is a long-term endeavor, and that the present value, the stock price, reflects a long stream of cash flows, not just 2020, 2021.
We often have conversations on programs like these, Jack, about what the market is telling us, the market in inverted commas. When you look beneath the market, yes, we do see a handful of tech firms doing fantastically well. If you pull up a chart of JP Morgan, that stock has just bounced along the bottom. We're still down 40% or so off the highs in 2020. What are the financials screaming at the moment to you?
I think the bigger picture, Jonathan, is that the stock market is now, and equity investors now are behaving like the bond market and like bond investors. And the fact is that this challenge is really, for many companies, maybe not a JP Morgan, but for many companies, a binary outcome. The best you can hope for in a bond portfolio is you get your money back. That's how a lot of equity investors are looking at their equity portfolios these days. And so if you look at, for example, the share of below investment grade in the index, it's perfectly aligned. The S&P 100 has about 3% below investment grade. The S&P 500 has about 5% below investment grade, and then mid caps and small caps are, upwards to 25%. So I think that's what you're seeing in JP Morgan. A lot of those customers, carry below investment grade ratings.
So, Jack, are you saying that the markets seem fairly valued right now when you peel back the surface and you see who the winners have been and who the losers have been?
Yeah, I think it's pretty adequately aligned. One of the things that we advised our clients early on was hard for me to do, was get out of passive index funds and get into actively managed. And then we provided them with what we call a belt and suspenders portfolio of, essentially AA or better companies that have a business model that'll sustain this coronavirus gulch. But I think that's, now you could probably get back into index funds because everything seems to be aligned.
Jack, fantastic to catch up with you this morning. Always great to get your thoughts. Jack Ablin there at Crescent Wealth. And before anyone writes in, of course, Larry Fink would not be promoting the SPDR ETF. He'd be promoting the iShares ETF.
I was thinking the same thing.
That's what we call that. We call that a surveillance break exclusive.
I'm just going to get that out there before anyone writes in. Yes, we know.
Yeah.
Okay.
And then,
right.
Mr. Fink, if you're listening this morning, you can please call in to 212.
We'd love that too, to see what he thinks of the Fed maybe buying equities in the future.
Yeah.
Let's get you some headlines, some news worldwide. We can do that with Michael Barr.
Good morning, John, Lisa, Tom. House Speaker Nancy Pelosi is requesting another $3 trillion in coronavirus relief. It would give state and local governments money to keep paying essential workers.
There are those who said, let's just pause. But the families who are suffering know that hunger doesn't take a pause, the rent doesn't take a pause, the bills don't take a pause, the hardship of losing a job or tragically losing a loved one doesn't take a pause.
Trump economic advisor Larry Kudlow said this week it's too soon to add more pandemic aid. Secretary of State Mike Pompeo is on a short visit to Israel, meeting with Prime Minister Benjamin Netanyahu and Knesset Speaker Benny Gantz. The two men will both be sworn in today to lead a new unity government. Pompeo says he and Netanyahu are expected to discuss the coronavirus pandemic.
We'll certainly talk about the challenges the globe faces with COVID, Israeli technology, Israeli medical expertise, all of the things that you and I and our teams can work on together. I know we'll deliver good outcomes.
Pompeo says they will also talk about Iran. The Supreme Court has finished hearing arguments in two cases involving President Trump's bid to keep his tax, bank, and other financial records private. It was unclear whether the justices would uphold lower court decisions that found subpoenas to Trump's accountant and banks by Manhattan prosecutors, and Congress should be enforced. The arguments were conducted by telephone because of the coronavirus. The last day of scheduled phone arguments is today. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts.
in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, thank you, sir. Thank you very much. Here are your price moves this morning. The S&P 500 down yesterday by a little more than 2%. The Nasdaq down by a similar amount. We bounced back, erasing the overnight losses on the S&P 500. We advanced by 14 points, up around about 0.5%. In the bond market, Lisa mentioning the supply we've had in the Treasury market. Really solid demand at the 10-year auction yesterday. 30-year auction a little bit later today. Yields come in ahead of that. Bull flattening once again, down 2 basis points on 30s. To 135 on 10s to 0.66%. And to round things out for you, in foreign exchange, the euro advances, the dollar is weaker against the bulk of G10. Chairman Powell, 1 hour and around about 45 minutes away from New York. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. NJIT faculty mentored Christoph Camacho when he was a student, helping him co-found a startup and patent a device that uses drone technology for reforestation and to collect valuable data for land management.
I founded Paratrees back in 2016, taking what I learned from my research at NJIT and migrating it to a startup. Our technology is to really enhance land management operations. So we work very closely with land management companies. So we have a drone that performs precision reforestation, and we do storm damage assessment, having access to drones that can collect data so it's much faster. And what is more important, we help them drive management decisions. NJIT has been there every step of the way, going full force with my company.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. futures advancing, pointing to a rebound after yesterday's late slide. Asian shares edged higher. European stocks are dropping. Traders are preparing for remarks this morning by Fed Chairman Jerome Powell, who may offer fresh clues on the outlook for the world's largest economy and for monetary policy. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up about 15 points. Dow futures up 134. NASDAQ futures up 62. The DAX in Germany's down 1.5%. 10-year Treasury up 4/30 seconds, yield 0.66%. The yield on the 2-year 0.15%. NYMEX crude oil's up 0.4% or 11 cents at $25.89 a barrel. COMEX gold up 0.2% or $3.50 at $17.10.20 an ounce. The euro 1.0862 against the dollar. British pound 1.2296 and the yen 106.98. And Chairman Powell speaks at 9 a.m. Wall Street time. Will bring his comments to you live right here on Bloomberg Radio. And that's a Bloomberg Business Flash. John.
Thanks, Karen. Looking forward to that. Thank you very much. The division in Washington over one thing in particular, many, but this one will really get the attention of markets in the weeks to come. House Democrats unveiling a $3 trillion plan, Tom. And the Senate Republicans already pushing back. Senate Majority Leader Mitch McConnell calling this a big laundry list of pet priorities. The unity that delivered a lot in the last couple of months has faded pretty quickly.
And it goes from Mr. Kudlow in your conversation last Friday, the Jobs Day, right over to the Senate Majority Leader and really all Republicans. Kevin Cirilli joins us now, our chief Washington correspondent. Kevin, how unified are the Republicans this time around, and do they have the ability to delay if we get a 20% plus unemployment rate?
Yes, they're unified, and yes, they do have the ability to delay. And here's why. Senate Majority Leader Mitch McConnell really saying, hey, not so fast. Let's try to get more data over the long term and where this thing goes. I think that there's a feeling in the conservative movement to not just put the focus on throwing money and a blank check at this problem, but to actually try to reopen the economy. And that's where I think the debate's headed, to be quite frank with you.
What are they looking to learn? What specifically are they reflecting on in terms of what they've delivered that they're not sure is working or not, Kevin?
Well, I think you saw this yesterday with Dr. Fauci's testimony before the Senate Health Committee, and it was on full display during that exchange with Kentucky Senator Rand Paul, the Republican, when he really pressed Dr. Fauci to diversify some of the brain trust, for lack of a better word, of the medical community that is advising the president and advising the country in terms of reopening. I think you're seeing this really play out down in Georgia, where the governor there, a Republican, has, yes, suffered low approval ratings. The last I saw before I came on air was about 39% Governor Kemp's approval rating, but still is trying to gradually inject confidence into consumers, but also into but also to balance that with the medical data. So, look, it's a tightrope. I think you're seeing it play out all over the world, but here in the United States, coming out of Congress, the politics is incredibly polarizing. There appears to be a trend of moving toward nonpartisanship as it relates to how to handle China. And finally, in an election year, it's going to completely upend the debate around that.
So as the debate does rage about reopening the economy, I'm wondering what the consensus is when it comes to further bailout funds. We know that the Democratic plan is dead on arrival, at least in its full scale, at least according to Mitch McConnell. But is there some consensus emerging on key issues, key amounts that will be necessary in the near future?
Yes, Lisa, and I thought Secretary Brulette really made this point with David Weston yesterday on Balance of Power. In terms of how the energy sector is going to be likely one of the bedrocks in terms of next economic stimulus. So that's from an energy perspective. Moving beyond that to a health sector perspective, I think that regardless of whether the economic stimulus comes in 2 weeks, I don't see that happening, or 2 months, I think you will see included in that additional funds for the health sector. And then beyond that standpoint, in terms of where things get incredibly dicey, is when you start talking about tourism, the hospitality industry, and airlines and whatnot. And I think from that vantage point, I don't think that's been figured out. You know, yesterday I spoke with a senior Republican strategist who said that, as you put it, Lisa, it's dead on arrival, but that there really does not appear to be, and I was quite struck by this, there really does not appear to be a working timetable for when the next round of stimulus comes.
Kevin, I think this is just so important. No one breathing has ever confronted, say, a 17% unemployment rate in Mitch McConnell's Kentucky and a 22% unemployment rate in New York City. I get it. And I get the cultural political divide. Is there anybody in Washington trying to model the conservative response to economic data that horrific? What do they actually do when the facts change?
That I think, it was just put on the calendar. Treasury Secretary Mnuchin will be testifying virtually, of course, before the Senate Banking Committee next week. And I think that, especially for our audience's perspective, could be incredibly telling, probably more so than Fauci's
So what's he going to
testimony.
do? Is he going to lecture the conservative Republicans and say, you guys are nuts?
I don't think it would be a lecture. I think to your point, though, it's going to be it's going to be an opportunity to see. I don't want to say factions in the Republican Party, but to see where Republicans are. And the Republicans on the banking committee, quite frankly, the Pat Toomey's of the world, the Richard Shelby's and the like, they are where the differences between them, I think, will that space between them will really be the compass for where conservatives go from an economic stimulus perspective, because they're the ones that Leader McConnell's listening to. He's listening to others, but from an economic perspective, the Republicans on the banking committee really have his ear. And I think it's going to be interesting to see where everyone stands on the banking committee from the right.
I think Chairman Powell's going to have something to say about this a little bit later. I imagine Adam Posen is going to be pushing him on it as well in the Q&A. Kevin, always great to catch up with you, sir. Thank you. Tom, this was something I feared, that when the economy slowly started to reopen, people would shift away from this crisis mentality. And let's face it, the crisis is not over. Unemployment is not going to come down aggressively to where it was a couple of months ago in a couple of months. We're going to need to do more.
We have these vignettes. Last night, Central Park's getting more and more busy. There, John, was an ice cream truck. And the joy and the many, many people not socially distancing with the ice cream, it was just sheer human joy.
Tell you, talking about Central Park, they're taking down the tents, those emergency tents outside the hospital. They're taking them down, which is sort of a key sign of the reopening of the city.
I sent John a note like, folks, I couldn't sleep last night. Vet bill was up
at midnight.
Complaining. And John, it was because of vet bill. And John, the numbers yesterday weren't pretty. To Dr. Fauci's defense, the numbers nationwide yesterday were not successful.
Look, of all the things that Dr. Fauci had to say yesterday, I think the one big concern for a lot of people was what he had to say about the fall term and going back to school, and that maybe the treatment and the testing would not be available to achieve it. That was a worry. If the kids can't go back to school, how do you get people back to work? Still to come. Much more to come.
If the kids can't go back to school, that's
Bloomberg
a disaster.
Radio. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing.
That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a Bloomberg Money Minute.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
Just this wall and that one to do, Dave, and then we're done. Whoop! Oh, no!
Hello, Steve the Sparky.
Pass us that roof tile, Chris.
Yep,
sure. I'll be fun. Oh, no. Saved by the gutter. Built to rough it with contractors. Samsung Rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes 16+. Conditions apply. Play responsibly.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio. 2 hours away from the opening bell, equity futures up 18 on the S&P 500, positive 0.6%. Chairman Powell just 90 minutes away. We will take that right here on Bloomberg Radio. Ahead of all of that, Tom, yields just coming a single basis point a 10-year to 0.67%. We had a record deficit, as expected, in the month of April. We have had a ton of issuance, Tom, and yet this market has taken it down pretty well.
The interview of the day of Global Wall Street for those in fixed income. It's wonderful to have him here because he is a template of one of the coolest majors in American academics history at the University of Pennsylvania. He worked for a small boutique firm called BlackRock and now has a shingle out at Morgan Stanley where he runs fixed income. Brian Weinstein joins us right now. Brian, we saw the history this morning of a red Bloomberg headline, UK, United Kingdom, 2-year yield, negative interest rate. Are you modeling, are you thinking about, is your research combine studying the outcome of negative interest rates in America?
Yes, absolutely. I mean, the Fed's been very clear that they don't want to go there, but the market has been just as clear that it's a risk. And listen, I don't think the experiment, as you look at it around the world, suggests that we should go there. But it's hard to imagine that there aren't more steps necessary and that negative yields will not be discussed. And you certainly can't argue that they couldn't be priced in.
Do you think that the Fed will be forced to take rates lower, below zero, not necessarily because of markets, but because of deflation, as we saw yesterday in the CPI print?
I don't think so. Let me answer the question somewhat differently. They'll be forced to do something, right? I think if you look at the whole in the economy, what they've done so far in the buying of corporate bonds, I don't think the market will think it's enough. So the market is going to test. Right, the market is going to prod the Fed. What could it do? Well, we could have credit sell off again, right? People would be surprised. I'm not sure why. Just because
because the Fed is buying doesn't mean that credit can't get worse. Also, as we priced in the last couple of days, we could price in negative yields and see if the market can give the Fed, if the Fed has clearance to go to negative rates, maybe they feel more comfortable. I doubt it. I think they'll choose other methods to stimulate the economy.
Brian, I feel the same way. No one in the core of the FOMC has suggested they'll take rates negative in any way, shape or form. I do think there will be some academics somewhere on the periphery of the FOMC that will bring this up when they start to see zero interest rates as being too tight relative to where inflation is. But I just don't hear it yet from the Fed. But I think what we need to do a better job of is drawing a distinction between what happens in the market, say on a 2-year yield, and what happens with the policy rate. You can have 2-year rates trade at a premium to the policy rate. We see that in Germany. Bund yields trade way below sometimes where the depot rate is at the ECB. We can see the same thing happen in the United States, can't we?
There's no question. And when you look at 10-year notes, and you can look at them at 66 basis points and talk about supply and say, oh my God, rates are so low. But we all know that if there's another panic, right, if we revisit the lows in equities, or there's just a need for duration, it becomes a commodity, right? No one cares whether it's 66 basis points or negative 30. As crazy as that may seem, if you need them, you buy them. So I agree with that. I think there could easily be much lower yields priced in if either the Fed goes that direction, or I think more likely the market decides that it needs safety, and then 10-year notes can trade negative for sure.
I wanted to ask you a question that I've asked a lot of people over the last week, and it's the amount of supply we've had, both on the Treasury side and on the credit side as well. Are you seeing any signs of indigestion at all, either in credit or in sovereigns, off the back of all of this supply over the last couple of weeks, last couple of months?
No, not yet. It's amazing, right? You've seen an amazing two months of corporate supply, the two biggest ever. A lot of government supply, a huge announcement, the talk of more borrowing from Congress, and I don't think you've had a chance for indigestion yet because the Fed has taken out the bulk of the supply. Listen, you've seen it in bits and pieces in credit, right? You saw some names trade 40, 50 tighter and then widen back out. But broadly, no. I think it's amazing how the market's taken down the supply, and it's probably a tribute to the Fed's actions and how much confidence it's instilled. And I think partially because there's just this demand for yield globally. It's not going away.
Perhaps, Brian, there is not any sign of indigestion when it comes to higher rated credit and government debt. However, there still is a pervasive concern about solvency risk. And I think this is sort of the key issue that I have, which is differentiating between liquidity and solvency risk, and the idea that the Fed is backstopping liquidity issues, not the issue of the rising bankruptcies that we see. How do you invest around that premise?
Right, it's fascinating. I heard you guys earlier about if you look at bank stocks, how they're at the lows, and then the five FANG stocks are at the highs. And we're not equity people, but as fixed income people, we're looking at the same market, right? You look at the bounce back you've had in investment grade credit, you have not had the same bounce back away from investment grade. High yield is still 750 basis points over. If you look at the structured markets where you have to get payments through the system, right? Rent payments and commercial mortgage payments and any type of car payment, all those types of securities really haven't bounced back that much. And so what I think you're supposed to do is avoid the temptation to chase liquidity, right? Locking in a 2% return on investment grade credit really isn't that exciting. There are a lot of opportunities in these other sectors where we think there will be payments, and you get paid 6, 7, 8%. And the high yield market is a good example. You can't buy the index, but there are plenty of good securities in there. So it's actually a great environment for people who are actively picking fixed income.
John, did you see the shade he just threw at Mike Wilson? Did you see how he did that?
I'm not sure Brian is throwing shade at his colleague.
Really? Are you trying to start a fight?
It was amazing how Brian just took a slam at the equity guys. He said, we're not like them.
Well, listen, fixed income, I never understand the equity markets. Those are a mystery to me. There are always parallels between the two markets, and I think this is one where there have been major distinctions between the two. And no, I'm not picking a fight with Mike. He's been on, and we're watching what he says.
Yeah, Brian Weinstein with us with Morgan Stanley, and hopefully he'll continue with us right now. Brian, I want to talk about something you said earlier, which is just simply the market decides what to do. And
that's the phone that's just gone down. Just hung out.
Brian, stay with us, please. I need it. But particularly the big money. And it comes down, as you said, to the desperation, I must buy the duration. And this is the lowering actuarial assumption. Do you assume across the Gorman platform that we're heading towards a new actuarial assumption? Can I dare say it's under 4%? And are we going to get used to a 3.x% bogey for big institutional money?
People are hesitant to move those type of numbers. We still see clients in the pension fund world with numbers two times that or higher. The actuarial communities are slow to move, but we definitely see a continued need from the pension fund community, especially to capture yields. And yes, those bogeys continue to fall. And as you get more accustomed to negative 60 basis points in Germany, the more people are willing to lower those targets. I haven't seen numbers like 3 and 4% thrown around from our client's perspective, but certainly the direction of travel is people are willing to accept lower yields, no question.
Brilliant.
Brian, really appreciate the perspective this morning, especially as we count everybody down to Chairman Powell. 9 Eastern coverage right here on Bloomberg Radio. We'll be taking that live alongside Adam Posen, a good friend of this program. He'll be doing the Q&A at the Peterson Institute. That was Brian Weinstein there of Morgan Stanley Investment Management. Tom, on the debt market, the Treasury supply for the months and months ahead, and Mr. Powell just around the corner.
Trillions involved. The Bloomberg NJIT STEM report, brought to you by New Jersey Institute of Technology, ranked in the top 2% nationally for alumni mid-career earnings and number 1 for student upward economic mobility. Learn more at njit.edu. Here's Bob Moon.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. With some colleges questioning the need for SAT and ACT testing as an entrance requirement, standardized test scores could be made optional by certain schools and college systems. And the possibility that some seniors could opt for a gap year instead of enrolling as planned could put some juniors who haven't even applied yet at a disadvantage. Business Insider reports a mass deference by those students could end up forcing the class of 2021 to compete with 2 years' worth of high school graduates for a college spot. A new coronavirus test could be a key but imperfect step toward the kind of mass screening deemed essential to reopening schools and businesses. The new test is cheaper and quicker than the current standard. Instead of detecting the virus itself, the new test detects proteins that predict infection. But the new test is not quite the breakthrough sought by top government health officials. The newly authorized test is less accurate than the gold standard test and can only be run on special equipment. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you, sir. Thank you very much. Just to pick up on that and add to it, this is what Dr. Fauci had to say yesterday. The idea of having treatments available or a vaccine to facilitate the re-entry of students into the fall term would be something that would be a bit of a bridge too far. That sparked a lot of concern. I can hear Lisa Brambis right now. Not just for people with kids, but also people with kids that need to go back to work. This is going to get really difficult in the months to come if they don't figure this out.
Yeah, I think that this is a huge issue, and I think that you rightly said that the market took a leg lower after this. Also, a question of how this disadvantages children who don't have internet lines. I mean, basically setting back kids for a full year, but I think people really are worried about not getting back to work, John.
Equity futures this morning up around about 16 points on the S&P 500. Some big issues to discuss through the program. Let's get you some headlines, some news worldwide. Here's Michael Bubb.
John, Lisa, Tom, thank you very much. House Speaker Nancy Pelosi has unveiled a more than $3 trillion new coronavirus aid package. It would provide nearly $1 trillion for states, cities, and tribal governments to avert layoffs and another $200 billion in hazard pay for essential workers. Senate Majority Leader Mitch McConnell says any bill that comes from the Democratic-controlled House must be focused on the issues of Americans and not a broad-based spending plan.
So we're going to insist on doing narrowly targeted legislation, if and when we do legislate again, and we may well, that addresses the problems, the needs, and not the aspirations of the Democratic majority in the House.
A vote in the House could come on Friday. Secretary of State Mike Pompeo is on a short visit to Israel, meeting with Prime Minister Benjamin Netanyahu and Knesset Speaker Benny Gantz. Netanyahu says he and Pompeo are expected to discuss the coronavirus pandemic and Iran.
Also discuss how we can continue in our partnership to combat and confront and roll back Iran's aggression in the Middle East, in Syria, everywhere else.
Netanyahu and Gantz will both be sworn in today to lead a new unity government. Attorney General Barr's move to drop charges against former National Security Advisor Michael Flynn is put on hold for now. U.S. District Judge Emmett Sullivan paused the move to drop charges against President Trump's former National Security Advisor until he learns more. The Justice Department moved to dismiss the criminal case against Flynn following his guilty plea in 2017 for lying to the FBI. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael Barr, sir, thank you very much. Your day ahead shaping up as follows then. Chairman Powell will be speaking at 9 Eastern time. We'll bring that to you right here on Bloomberg Radio and on Bloomberg TV. A little bit later, at 1 Eastern, we will get an issue of 30-year bonds, $22 billion worth. If you're on the Bloomberg terminal, if you have access, you're a subscriber, ECO20 space US to get that information up for you. All the bond issuances there. And readily available, Tom, on the Bloomberg terminal. There you go.
Yeah. John, one thing I want to bring up quickly here is Euro Swissy was stronger today, not through the new recent strength. This is a George Saravelis Deutsche Bank idea of Swiss franc just getting ever stronger. As Lisa mentioned, John, the deflationary tendencies out there. It's pulled back in the last 20 minutes, but I'm watching Swiss franc this morning.
And I've got to be honest with you, Tom, if you pull up a chart over the last 6 months, it is just a one-way move. It has hardly corrected
and it's elegant.
At all.
It's elegant.
That's what's really interesting about that chart on Euro Swissy. From New York this morning, good morning to you all. This is Bloomberg Radio, live on Bloomberg.
With a Bloomberg Business of Sports report, I'm Michael Barr. Major League Baseball owners gave the go-ahead to make a proposal to the union that could lead to the coronavirus delayed season starting around the 4th of July weekend in ballparks without fans. The plan also calls for expanding the designated hitter to the National League for 2020. London Mayor Sadiq Khan says he believes it is too early for the Premier League to be planning a resumption of the season amid the coronavirus pandemic. Premier League clubs Arsenal, Chelsea, Crystal Palace, Tottenham, and West Ham all play in London. The mayor's office says the league should resume only when it is safe to do so. British Prime Minister Boris Johnson said that sports events in the country could resume in June if there is not a new spike in COVID-19 infections. And that is the Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC.
Global news.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying, all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
Switch on Acorn TV, the brand new streaming service featuring world-class TV from Britain and beyond. Watch exclusive premieres like the colourful crime drama Queens of Mystery.
Once you have eliminated the impossible, whatever remains, however improbable, must be the truth.
And fan favourites like Inspector George Gently.
I'm just an old copper doing his job.
If you love drama with a little mystery thrown in, enjoy 30 days free with code ACORN30. Then just $4.99 a month. No adverts, no contract, cancel anytime. Join online today at acorn.tv.
With the shift to remote working, video conferencing has become the new normal to keep your business running. But is it reliable and secure? Cisco WebEx is committed to the highest security standards and already trusted by both small businesses and many of the world's largest organizations. Call, message and meet securely with Cisco WebEx. Sign up at cisco.uk/work from home. When secure remote work is critical, WebEx is essential.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are rising, pointing to a rebound after yesterday's latest slide. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 21 points, Dow futures up 189, NASDAQ futures up 83. The DAX in Germany is down 1.25%. 10-year Treasury up 3/32. The yield 0.66%. The yield on the 2 years at 0.16%. NYMEX crude oil is up 0.4% or 11 cents at $25.89 a barrel. COMEX gold up 0.4% or $7.10 at $17.13.90 an ounce. The euro 1.0874 against the dollar. British pound 1.2329. The yen's at 106.93. Traders preparing for remarks this morning by Fed Chairman Jerome Powell, who may offer fresh clues on the outlook for the world's largest economy and for monetary policy. He speaks at 9 a.m. Wall Street time. We'll bring his comments to you live right here on Bloomberg Radio. And Uber Technologies is selling new debt just a day after a report said the company has made an offer to acquire food delivery company Grubhub. The ride-hailing service is issuing $750 million of senior notes due 2025. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Stanley Druckenmiller making some headlines in the last 24 hours. He had this to say about the V-shaped recovery hopes. I just think that the V-out is a fantasy, Tom King. A fantasy that I think a lot of people would hope for. We all want the recovery, just many people don't think it's going to happen in that form.
I jumped on this, John, the other day, and I got some love notes. That's called hate mail, folks, on this. And it's a perfect guest to talk to right now, John, about this. I'm glad you bring it up. Christian Keller with us with Barclays, head of their economic coverage. And Christian, I was going to go like 8 ways towards Chairman Powell, but John's absolutely correct to revisit the fantasy led by the Bank of England. Down 14%, up 15% in short order. Do you have any confidence those kind of fantasies could occur?
Well, let's first, in a way, maybe look a little bit back why they would even entertain such what you call a fantasy. I mean, fact is simply the following. All the research shows from past recessions and recoveries that if you have a recession where A, you have a lot of policy response, and B, a recession that's not driven by a banking crisis, you should actually recover relatively robustly. Now, I guess markets and the Bank of England, for that matter, looked at this and said, look, we have an unprecedented policy response, a massive and very quick policy response, and we have actually a banking system that, went into this with high capital buffers. And so once the health issue is gone, you would expect you reopen the economy and things go very quickly back up. Now, therefore, I don't think initially this was necessarily fantasy. I think what it's dawning now on us is that, the health issue, unfortunately, this virus is still, not that well understood. And we are now looking into all the opening of economies being fairly gradual with the risk of actually having to shut down parts again if we have a second wave, etc. I think this is the issue. I think otherwise, it was not wrong to think that this had all the ingredients for a V-shaped recovery in principle.
Christian, I'm struck by your comment about an unprecedented policy response, and that has been a common line, and yet a growing number of investors and economists are saying that the response has barely broached the amount of demand destruction in the economy. In other words, it has barely filled the gap that we've opened up. Does this really even count as stimulus, as a response, when it's just sort of filling a sort of endless hole at this point?
Yeah, I think, both comments are true. It is true that this is the largest, at least in our recent history, the largest response. But it's also true, unfortunately, that the decline in activity is by far the largest we've seen in modern times. So, look, I do agree. There is a risk that regardless of the magnitude of the policy response, it may not be enough. And I think if we now look at, this morning we were surprised on the upside a bit by some of the March data and the Q1 data. Things are not being as bad as people expected, but the second quarter, we will see massive declines. And as I said, if this is not completely lifted in Q3, and if this extends, I think we actually do get into the situation whereby the policy response may simply not be enough. And it's also a policy response that cannot be sustained forever. If you do this for 1-2 quarters because you're in the bottom of a V, you can do it. If you need to extend this for several quarters, the negative impact of, potentially looking at the sustainability of debt and all the liabilities you accumulate, I think that will have an impact then on sentiment as well.
Well, Christian, I don't want to make this the doom and gloom report, but Jim Bullard of the St. Louis Fed, I think, alluded to what you're discussing right now. And he said the longer you keep this economy locked down, we run the real risk of a depression-scale recession. Are they the kind of things you're thinking about, Christian, if we have to keep things locked down for much longer?
Look, I think, this is, as I said, it is not yet my scenario. I do hope in a way that we open gradually, but we do get back on to a relatively normally functioning economy. But I think the risk is exactly what you stated, that this is prolonged. You keep unemployment high. That means, people don't go to work, they don't have income. And after a while, equity markets will realize, yes, we get a lot of liquidity boost, but if earnings are not supported by demand, we may have to revise down. And you get into this kind of a doom loop that then, ultimately, of course, depression could be the outcome.
Christian, very quickly here, when Chairman Powell speaks in an hour and 10 minutes, is he speaking understanding he will see a 20% unemployment America?
I do think that has become quite clear to everyone by now. We're following the data on a weekly basis. Obviously, we see that the situation has peaked, so we're now seeing less new unemployment, but nevertheless, we're moving towards 20%. I think this has been widely forecasted now, and I think this is why the Fed has been as aggressive as it has been, and this is why they say, don't worry about the fiscal situation, the fiscal sustainability, and about issuing debt at the moment, because they do see what is happening on the labor market. Must be a major concern for them.
Christian Keller, fantastic to get your thoughts on this program. Barclays Head of Economics Research. I hope you're doing well, sir. Look, I think this is an important debate, of course, ahead of Chairman Powell. He is going to get asked about the deficit. I imagine Adam Posen is going to follow up with those kind of questions, Tom. Is this the time to worry about the deficit? Because there are some people in Washington who are starting to worry about the deficit.
I just don't buy it for a minute. I think Dr. Posen, knowing his economics, will grill Chairman Powell on this. And look, to be clear, John, Dr. Posen will grill the chairman with great respect for his public service and public duty. But again, John, I just want to go back to, we've never seen this set of statistics before.
You don't think Adams picked up any tips on interviewing from you over the last 10 years?
No.
Every time he speaks, and then just cut him off and then ask him another question.
Yeah, he could do that. He could, cut him off and just move right on. Yeah,
you never know. I don't know if Adam's going to back away or if he'll pull a Tom Keane and just get right in there and talk over it.
He'd probably go to traffic and weather at some point in the middle.
Equity futures up 22. We advance 0.8% from New York. This is Bloomberg.
Have you wanted to speak a new language?
Did somebody say just me? Get delivery like a G. See, hungry dogs gotta eat. I get mines every day, every week. Chicken wings to the crib, I'm sitting in. Burger in the low. Hope they put the pickle in. Wonton on a catamaran. Oodles and noodles, thank you, my man. Justeat. Somebody say just eat.
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rollin'.
It's not impossible.
Their epic story of love and loss continues. Download and stream the single Impossible from the band Steady Rolling, wherever good music lives.
Just this wall and that one to do, Dave, and then we're done. Whoop! Oh, no!
Hello, Steve the Sparky.
Pass us that roof tile, Chris.
Yep, sure.
I'll be fun. Oh, no. Oh, phew. Saved by the gutter. Built to rough it with contractors. Samsung Rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
If you want to do something important, work in adult social care.
I'm Greg and I lead the team at a residential care home. Supporting people to live life to the fullest. It's an amazing job to have.
We are recruiting in your local area. We need you now, and they need you always. Care for others. Make a difference. Today. Search adult social care jobs now. Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes 16+. Conditions apply. Play responsibly.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Get your cook on with Asda. With Butcher Selection quarter pounder beef burgers, get a 4-pack for just £2.28. And salmon fillets, get a 2-pack for only £2.97. So dinner's always a winner. At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores online, subject to availability.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeart Radio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz, and Tom Keene. Good morning across this nation. In Washington, Chairman Powell will speak here to the Peterson Institute and Dr. Posen. We look for that in an hour. Good morning in Washington. Good morning in Boston, San Francisco, and particularly good morning to all of you working at home during this pandemic, during this social distancing that we are doing. Mr. Farrell, Ms. Abramowitz, and I are socially distant as always, but we were distant beforehand, so nothing really changed for us.
That's true.
We have an exceptionally important speech coming up. And I'm sorry, John, the backdrop here of this labor economy, there's this distraction, this theory, the economic babble. There's a big round number, 15% unemployment, and Kevin Hassett of the White House, the president's economist, says we're going to 20% jobless rate.
How much more can the Fed do when many people think the Fed has already done too much? It will be interesting to see his assessment on fiscal. I would just wonder how he'll frame his particular comments on that, Tom, in the hour to come, because things are slowing down in Washington at a time when I don't think we need them to.
I'm going to go all Irving Fisher on Lisa Abramowitz right now. Lisa, you see it across everything in yield, in rates, in inflation. There's, I know Dr. Fauci was there yesterday, but also the economic data clearly indicates that trend, the fear of deflation.
Yeah, and the real concern here is there's the issue of liquidity risk and making sure that markets continue to function appropriately, which is something that the Fed can do. And then there's solvency risk that comes in a deflationary environment with companies filing for bankruptcy. The Fed does not want to be in a position of backstopping solvency risk, and yet is that where they're headed, Tom?
I mean, let's talk about solvency risk for a moment, folks. We're going to rip up the script here. John, I mean, you're not on the phone every day, but about every fourth day with Sir Richard. I get that. But you look at something like Virgin Airlines, Virgin Galactic, Virgin this, Virgin that. In your United Kingdom, he's scrambling for his business life, isn't he?
He's got to raise some money quick, and he's not alone. I think a lot of the airlines were in a lot of trouble a couple of months ago, and Lisa brings up a really important point. There was a fight for liquidity, for access to the capital markets over the last couple of months, and the Federal Reserve opened the door wide open for a lot of issuers to come in and raise capital. I think raising capital and having access to liquidity is one thing, but having an ongoing business, a viable business for the demand backdrop that we're about to see as we come out of this is going to be a very, very different story.
That code on the terminal, NIBCY. Lisa, what are you filing in bankruptcies quickly before we get to Priya?
Well, I think JCPenney is something to be watching.
Retail,
Neiman Marcus, of course. Retail very much, but it's not just retail. We're seeing it spread out. The healthcare industry very much in the forefront as a lot of these smaller hospital chains cannot maintain their business model without elective surgeries, Tom.
I haven't looked at that. Very interesting as well. On Full Faith and Credit with TD Securities, Priya Misra joins us. Priya, just simply, what are you going to listen for from Chairman Powell in 1 hour?
Hi, Tom. Hi, everyone. I think I'll be watching for what next. So, what we heard from Chair Powell in the last Fed meeting was considerable risk in the medium term. So that's a bit of a departure from what he said earlier, which was, things are going to rebound in the second half. I think the Fed, rightfully so, is addressing that there is some structural damage being done here. But they haven't talked about what next. So I think to tell us, more forward guidance, perhaps yield curve control, we're looking for the Fed to undertake yield curve control by the end of the year. I think there's a lot of talk around negative rates. I wish he can actually sort of squash that, because negative rates is going to create far more problems than anything it can actually solve. So the market's been pricing in negative rates. I think he needs to say no negative rates or it's not an effective tool. But here's what we can do. I think we need a little bit of what next from the Fed.
Okay, fine. I want to go off Fobosi on you right now. In the interior movement of the yield market right now, Priya, what's the attribute of the Fobosi analysis of the yield curve that matters right now?
That's great. So I think there's a lot of the front end is all about Fed pricing. So that ends up being more economics. When you talk about Fobosi, you're talking about term premium, which is the supply demand that we're dealing with. That tug of war in the long end is all about the U.S. Treasury that's issuing a ton of long end paper, and essentially the only buyer in town is the Fed. But the Fed buying has been flexible. We don't know how long they're going to buy, what pace, what's the total amount. So that's why the market, every auction ends up being a liquidity event, because we have to wait to see will the demand show up, will the Fed buy enough. So there's a sort of separate issue in the long end that I don't think the Fed is going to give up flexibility. I think we're just going to have to trade auctions with the hope that the Fed is there as a backstop. But the front end is much more anchored by the economy, by, when will the Fed hike? And the market's not pricing in hikes until 2024. So that's going to put a ceiling on all yields. But I'd say that ceiling is just a lot softer in the long end because of the supply-demand issue.
Well, let's talk about the front end just a little bit more, shall we? In 55 minutes' time, look, I imagine he's going to be asked the question about negative interest rates. Do you expect, as many people expect him to, Priya, just to bat that one away?
Yes, I think he's going to talk about, I hope he's more specific rather than just saying no, because as we've all lived through it, many unthinkables became possible over the last 2 months. So I think just saying no, that's not enough. I think that will not really squash all the speculation. I think if he addresses that money market funds, there's $5 trillion in government money market funds, they break the buck with negative rates. This is something very peculiar to the U.S. financial money markets. It doesn't exist in Europe and Japan. So just taking what Europe and Japan have done and saying that can work here, I think doesn't work. So if he addresses that there are plumbing issues in the money markets, or there's a problem with financial intermediation, if you take rates negative, I think credit creation actually goes away. So I think if he's more specific about the problems with negative rates, and instead says, look, we've got 13.3 facilities, we've got yield curve control, we've got other tools, we've got a balance sheet we can grow. I think forcefully saying that they can grow the balance sheet to an unlimited amount, I think that will comfort the market that we're not going to negative rates, but they have other things that they can help out with, particularly as the fiscal easing. There doesn't seem to be a plan, or at least there doesn't seem to be much consensus on what this phase 4 of the fiscal easing will look like.
Priya, you raised such an important point, which is basically that Fed official after Fed official has come out this week and in prior weeks and said, we're not taking rates negative. And the market says, you still may. Actually, we're going to price that in. I want to home in, though, on the idea of the balance sheet and sort of this unlimited capacity. Right now, $6.7 trillion is the total size, up $2 trillion from just 2 months ago. How high could that go without triggering a political debate in Washington?
Right. I think it's more the political issue. So in Japan, that the BOJ balance sheet as a share of GDP is much, much higher. So technically there is no level. But I think it starts becoming a political issue, which is why I think if the Fed can strengthen forward guidance through yield curve control or through average inflation targeting, or go back to the Evans rule, we're not going to hike until the unemployment rate is at 5% or inflation is above 2%. They actually lower the amount they have to buy in the front end. So then they would have to still keep buying. So I expect the balance sheet to get to 12 trillion by the time, at least, with the current supply dynamic.
By when?
Right.
By when?
By the end of next year. Right.
Wow.
So but there's no limit to how much it can grow. But I think they'll want to prevent buying more. And for that, just set the front end, anchor it solidly with forward guidance. And then, but they still have to buy a lot in the long end. I don't think they want to go into yield curve control for the 10-year. The BOJ did do that because they didn't want to buy more. But I think, 10-year treasury is a very different environment. I don't think the Fed goes that far. But yeah, I think they'll have to do more 13.3 and more bond buying. So the balance sheet's growing.
$12 trillion, is this going to be the same type of composition that we've already been seeing, or are they going to expand out into other kinds of assets?
If risk assets are where they are now, which I've struggled with how quickly we've rallied. So I guess in my makeup, there is going to be another day of reckoning where the risk complex understands that there is no great reopening. The new normal looks very different from what we lived in Jan and Feb. Then I think they'll have to do more 13.3 facilities. But if risk assets are here, credit is here, I think then the balance sheet will look much more treasuries than it will risk assets. But I think it's going to depend on how risk assets behave.
This public service announcement, folks, brought to you by Bloomberg Surveillance, John Farrow, Lisa Abramowitz, and Tom Keene. And now Priya Misra will explain to our global audience, what is yield curve control? Lisa, what? Priya, what is yield curve control?
I'll just tell you, it's a nightmare for a rate strategist. So you can just imagine how difficult it is for me to even suggest that.
What is it?
But it is the Fed. It is a central bank that is credible. And why are they credible? Because they have an unlimited balance sheet. It's a central bank saying, we will not let rates in a certain part of the curve go above a level, or we'll target a certain level. I think they picked the 3-year. So the Fed will not be the first one to do it. RBA is targeting the 3-year point. The BOJ is targeting the 10-year point. So it's almost when you're sort of out of bullets, well, here's a new creative tool. We just tell you rates are not going above a level. So then forget data dependence.
We got to go, but come on, Priya. You're out of bullets, and you can see the whites of their eyes. They're attacking. I mean, I just, come on.
Can you really upset Tom, Priya, and just tell Tom what the BOJ targets on the 10-year maturity?
It's like, what is it? It's like, I don't
it's zero, Tom.
Zero.
It's zero.
Come on, folks, none of this is in Abel Bernanke. None of this is in Mankiw. None of this. Come on, Priya.
That is true. Well, we're living in historic times, so they have to become more creative. And actually, Brainerd, Fed Governor Brainerd, has talked about this as being a useful tool. But
Priya.
We'll see.
We've got to leave it there.
Thank you.
Priya Misra of TD. Tom, I'm sure it brings Priya no satisfaction at all. If you're a rate strategist and the Fed turns around and says, we're nationalising the market, this is now the price for the foreseeable future.
John, what you just said is... John, stop. What you just said is 99.99% of this. They are nationalizing the fixed income
that's what's
market.
happened.
No end for buts.
Tom, some of these securities in Japan go days without even trading.
When do they buy Amazon? Bezos needs a bid.
I think the Swissies, the Swiss National Bank are doing that, aren't they?
They are. Yes, I saw a chart of that. A lot of Microsoft.
From New York, let's get you some headlines, some news worldwide. Here's Michael Barr.
John, Lisa, Tom, President Trump's former campaign chairman Paul Manafort is said to have been released from prison to serve the remainder of his sentence in home confinement because of concerns over the coronavirus. According to ABC News, Manafort, who was 71, was released from FCI Loretto in central Pennsylvania early this morning. Manafort has been serving out his more than 7-year sentence for tax fraud and conspiracy. The approach to reopening the American economy has some states moving faster than others. Bloomberg's Martin DeCarroll reports on how individual governors are handling pressure to resume commerce.
Kentucky is entering phase 1 of Governor Andy Beshear's reopening plan. Industries from construction to horse racing without fans must meet strict criteria or be shut down again.
I want people to do anything that's safe. It's that I can't tell you that something is safe when it's not.
A couple hundred miles away, one of the first states to reopen, Georgia Governor Brian Kemp is already loosening occupancy restrictions on child care centers and restaurants.
We will allow 10 patrons per 300 square feet.
Meanwhile, other regions remain shuttered, such as Washington, D.C. and its suburbs, where businesses are largely supportive of the take it slowly approach. Martin DeCaro, Bloomberg Radio.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you, sir. Thank you very much. As we count you down to Chair Jay Powell speaking right here on Bloomberg Radio with the Peterson Institute coming up at 9 Eastern from New York. For our audience worldwide, you are listening to Bloomberg Surveillance live on Bloomberg Radio.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up-to-date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from...
Oh, just there, Dave. Smashing. Great. Really? Night, Steve. Yeah, see ya. Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes. 16+. Conditions apply. Play responsibly.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are advancing, pointing to a rebound after yesterday's late slide. Traders are preparing for remarks this morning by Fed Chairman Jerome Powell, who may offer some fresh clues on the outlook for the world's largest economy and for monetary policy. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up about 20 points. Dow futures up 165 and NASDAQ futures up 79. The DAX in Germany is down 1.25%. 10-year Treasury up 4/32, yield 0.66%. The yield on the 2-year 0.16%. NYMEX crude oil is down 0.25% or 6 cents at $25.72 a barrel. COMEX gold is up 0.4% or $6.50 at $17.1340 an ounce. The euro 1.0876 against the dollar. British pound 1.2321 and the yen 106.89. And Chairman Powell speaking at 9 a.m. Wall Street time. We bring his comments to you live right here on Bloomberg Radio. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you. Thank you very much. And now for a battle in California, where Tesla may well be allowed to scale up activities at its U.S. car plant as soon as next week. They have been battling, Tom, with a county in California. Elon Musk has been very outspoken about his willingness, his demands to reopen his factory.
Dan Ives with us, with Wedbush. Lots to talk about on tech. Let's start with the soap opera at Fremont. Dan, give us some perspective here. What's the nuance here that's not in the media and the hyperbole of Mr. Musk?
Look, the nuance is the company is burning a few $100 million of cash every day that they don't open that facility. And this...
Yeah, okay, so what? Ford Motor is too.
Yeah, and look, and it just speaks to Tesla and Musk felt like they had more leverage in the situation versus Alameda County. It was an old Western standoff, and at least based on what we're seeing, they won this game of poker against the county with the state of California stepping in. And I think, that's why you're going to see the stock up, because from an investor perspective, now the engines can get restarted in terms of producing those cars safely and, from a worker perspective.
I'm wondering, Dan, as we try to parse out the winners and the losers, big tech has been a big winner. And Tesla's been on that board just because they have been, I guess, considered part of this new wave, and their shares up by almost 100% year to date. I'm just wondering how much hopium this is and how much reality that they're actually going to be at the forefront, especially as oil prices come down.
Yeah, and Lisa, we've talked about a lot of it comes down to China. I mean, China is a key part of the bull thesis in Tesla. And that's why investors right here, they're looking on the other side of the dark valley in terms of China. I think China right now, fundamentally, from a bull perspective, is adding about $300 per share to the stock.
Let's talk more broadly about some of the big tech firms out there as well, Dan, because you don't just cover Tesla. The big five that have driven this equity market aggressively higher off the lows. Are we pushing the limitations just in terms of valuations, or are you comfortable with what they're doing with the top and bottom line?
Well, look, I'm comfortable, and I think you come away from earnings season more emboldened to be bullish on tech through this dark storm. Because if you start to think about streaming and Netflix and e-commerce and cloud and Amazon, and you look at cloud with Microsoft and even Apple. I mean, Apple is a name where even though the next quarter or two looks extremely dark from a demand perspective, there's an underlying pent-up demand on the other side of it. So I think when you look at large cap tech, the stronger getting stronger. And I think investors, even though it's a narrower rally, continue right here to be more bullish from what you've seen throughout this earnings season.
Dan, I think what people are sort of getting uncomfortable with it increasingly as we look out to this economy reopening, some of these companies are very, very dependent on ad spend. Some of these companies are very dependent on business spend, on software. Out of those two stories, which do you think is going to be most insulated coming out the other side of this?
Yeah, I think cloud spend will be a lot more insulated than the advertising spend, because obviously advertising, has some major headwinds. I think when you look at cloud, part of it is that enterprises, even in a tighter spending environment, they're basically accelerated to need to move to the cloud. And that's companies like Microsoft, Amazon, Google, and then across the whole food chain from applications to the cloud stack. So I think,
No, I don't mean to interrupt, but it's just really, really interesting, Dan. There's like 8 ways to go here. I noticed that Apple launched a new Logic yesterday. Huge uproar in the music business.
You should do Chair Powell later, honestly. I would love that.
I would. I'd cut him right off. But Dan, I got to go to the Bloomberg headline today that very quietly, Amazon is back to next day delivery or near next day delivery. I mean, do you find that remarkable in this pandemic that Amazon can get back on track that quickly?
It's for the history books in terms of what Bezos and Amazon have done. Obviously, some PR issues and some black eyes through it. But from a logistics perspective, that was really the missing piece. That was the only thing that was going to stop this machine in terms of Amazon.
Yeah.
And that's when you put that with everything. This is stock that continues to go higher, in my opinion.
Right there, Lisa. That's where you cut in.
Yeah. Dan, they're trying to train me to be as invasive. No, I know. This is a perpetual battle. I will say, Dan, just to sort of shower you with all tech news here more broadly, one thing that really caught my attention yesterday, Twitter CEO Jack Dorsey coming out and saying that he will not require any of his employees to come into the office ever unless there is a critical function that requires them to do so. How much do you expect the big tech firms to move completely from a working from home kind of backdrop and remove the office space?
Yeah, I think that's a little more extreme in terms on the Twitter side. I mean, I think it's going to be a balanced approach, but also I think it depends on some of the different types. I think like an Apple, from an engineering perspective, I think some of those workers are going to have to go back to campus maybe sooner versus, let's say, the way Twitter's handling it. I think it's going to be more balanced. I think definitely throughout the remainder of the year, it's going to be tough to see more getting back to the office from what we've seen, especially out in the Valley.
John, do we go back to a campus?
We don't go back to a campus. No. Certain people might make it feel like a campus, including you. Dan Ives, great to catch up with you, sir.
Fabulous, Dan.
Wedbush Securities Managing Director, joining us on the big tech firms at the moment as we count you down to that Chairman Powell speech. Around about 35 minutes away, Tom. Huge focus on this negative rate debate, and I imagine it's got to come up with Adam Posen. He's got to be asked the question. And in Priya's point a little bit earlier, just saying, he's probably not going to put this to bed. You've got to say no.
One more time, John.
And
John, one more time.
I don't think that's in Chairman Powell's style book. You've got to say no, and then you've got to say why no in America. Why it might work somewhere else, even though some people would say it doesn't, but it won't work here.
Let us remind our audience that this is not the congressman from wherever trying to move towards a video to show the constituency. Dr. Posen is a lead economics in the global economic sphere. He has public service to the United Kingdom and the Bank of England. He's truly one of America's experts on German economics as well. Adam Posen with Chairman Powell in 35 minutes. You need to stay with us for the next hour as well. This is Bloomberg. Good morning.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
This is a Bloomberg.
Oh, just there, Dave. Smashing. Great. Really? Night, Steve.
Yeah, see ya.
Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung rugged range.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
Get your cook on with Asda. With Butcher Selection quarter pounder beef burgers, get a 4-pack for just £2.28. And salmon fillets, get a 2-pack for only £2.97. So dinner's always a winner. At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores online, subject to availability.
Live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio with more economic data out of the United States. Here's Vinny Giudice.
Okay, Jonathan, the government says the producer price index, a gauge of wholesale prices, posted a big drop in April, down 1.3%, more than forecast, excluding food and energy, down 0.3%. Again, another report showing tame inflation, perhaps a period of disinflation. April, PPI, down 1.3% quickly. Tuesday, figures from the Treasury, late data, the budget deficit for the month of April alone, setting a record as the government pumps in fiscal support to contain the economic damage from the pandemic. I'm Vinny Del Giudice, Bloomberg Radio. Let's go back to New York.
Vinny, thank you very much. And of course, to fund all of that spending, we will get $22 billion of 30-year bonds coming up a little bit later. 10-year auction went terrifically well yesterday. I wonder if we'll get more of the same this afternoon. That will happen at 1 p.m. Eastern time. Tom, I think we look at the inflationary backdrop, largely expected, maybe much worse than expected, actually, just in terms of the price decline on both CPI and PPI in the last 24 hours.
For those of a younger vintage, PPI is not what it used to be. It used to be micro-analyzed, John. This is at least 20 years ago, if not 25 years ago. And it just popped into my puny little brain that maybe in this pandemic, we're going to get back to real analysis of the three tranches of PPI, that, going from the factory out to finished goods. Those numbers, John, were not all that good.
No, they look ugly, and this is going to play into the deflationary calls from a lot of corners in the economics world, Tom, and how the Fed responds to that. And this was something we mentioned a little bit earlier on the program. When you have zero interest rates, but you have a negative inflation rate, there will be someone in academia somewhere screaming, policy's too tight. And that's how you end up with negative interest rates in places like Europe and places like Japan.
And we saw it in New Zealand, the discussion well today. Dana Peterson with us now with Citigroup. Dana, has Citigroup adjusted its, what I'm going to call, inflationary matrix for the United States of America?
Well, we have been downgrading our inflation expectations, and certainly reports from the CPI as well as the PPI justify those downgrades. We're seeing that there's less demand globally, less demand clearly in the U.S., and that's translating into declines in prices for leisurely goods, and services, but also in things like energy.
PPI and CPI, we expect these numbers to be lower. What we've got to try and figure out, Dana, is what the recovery looks like and what the trajectory is for prices from there. How are you modelling those kind of things at the moment?
Well, I mean, it certainly is difficult, but it's going to be very much dictated by the recovery in demand, consumer demand, also business demand for intermediate products and raw goods. And that's probably going to track what we're expecting for the economy in general. And we're not expecting for the U.S. economy to kind of get back to its pre-COVID levels of activity until early next year. So we anticipate that inflation would follow it.
Dana, this seems to be a growing consensus right now. BlackRock's Rick Reeder came out yesterday after the CPI data and said, don't get carried away and extrapolate out the deflation that we saw in 1 month to an entire year or two, and that they will see a resurgence in inflation next year. What has to happen for that to occur, to sort of, for us not to see a dangerous deflationary spiral?
Well, I think, again, we're not expecting that the COVID environment is going to persist through the end of the year. At some point, state and local governments are going to be allowing, we're seeing that already, about 65% of the economy in the U.S. is showing some gradual reopenings, and there will be a return to activities, certainly work, things that are mandatory. And then ultimately, you'll see later on a return to things that we classify as play, things that are more discretionary. And as that happens, you will see, as I said, demand in picking up, the economy starting to recover, and that should prevent an deflationary spiral.
Going forward, I'm wondering, Dana, what you're hoping to hear from Jay Powell today to assure markets that he's not going to take rates negative and that the Fed will continue to backstop market liquidity, if not also valuations.
Well, I mean, we're expecting him to say all the things that you just said very clearly and plainly, and agree with other central bank officials who have said, look, negative rates are not a good idea for the U.S., but the Fed will remain vigilant. The Fed will remain accommodative. We're also expecting the Fed's going to continue to gradually lower the amounts of purchases to get the balance sheet purchases back to somewhere between 60 and 80 billion a month. These are things that we're expecting, and the market should expect those things as well.
Yeah, but what's fascinating about this, folks, and I think John Farrow did a great job, folks, of underscoring this difference. Now, in 25 minutes, you're going to hear one of the world's top economic thinkers, Adam Posen, grill the chairman. Dana, this is not going to be a normal back and forth. What does Dr. Posen have to crowbar out of the chairman? I mean, he's going to ask him some tough follow-up questions, isn't he?
Well, I'm sure that probably will happen. And I think, a key thing will be, why shouldn't the U.S. adopt negative interest rates? Well, I mean, first of all, the money markets in the U.S. are large and complex, more so than, say, certain smaller economies in Europe. Also, the experience in Europe has been probably tilted more towards negative than positive. And then let's just think about the U.S. Culture. Are we really going to tell people that you're going to have to pay the bank to save? So I would imagine that Chair Powell is going to try to make those arguments quite clear.
And yet still, in Europe, we know all of those things, and they took them deeper into negative territory. Dana, my worry, as we all sit here and just dismiss the idea, because I believe everyone is on the same page that this is a terrible idea and nobody thinks the Federal Reserve will go through with it. I remember having these conversations in Europe and they still went through with it. Groupthink is a dangerous thing sometimes, and when you put a ton of academics into a room together and they often end up saying the same thing, Dana, sometimes these central banks can make mistakes. And when you said a little bit earlier that the Fed will try and keep monetary policy accommodative, ask a central banker if monetary policy is accommodative at the zero lower bound if inflation is negative. Is monetary policy still accommodative? How do they answer that question?
Well, I mean, certainly the Fed has basically thrown everything at the board here. And I think the Fed, certainly with all the different backstops, the different asset classes, and certainly the loan programs to Main Street. I mean, the Fed is really, I think, doing a very difficult job.
Yeah.
But I think what's really important is what we see on the fiscal policy side. I mean, we've seen Congress and the president really also throw a lot at the board here in terms of supporting different aspects of the economy. And certainly the House has put forward another plan, $3 trillion worth of spending to help support the economy. So the Fed can't possibly do this all by itself.
Right. Dana, I don't want you to feel any pressure. I know Michael Corbett listens to us on a daily basis, so don't feel any pressure here at all. But your economist, Catherine Mann, has huge European exposure with her tenure of duty in Paris at OECD. What's the official Citigroup line on the efficacy of negative interest rates?
Well, what I've read from our colleagues is that it hasn't been that great of an experience. And again, when you think about it, the economies who've adopted it, they've been pretty small, and their markets are also pretty small. And so it's kind of difficult to extrapolate these small markets and economies to something as large and complex as the U.S. financial market.
I will just say that J.P. Morgan actually did come out with a report that said that negative rates could be a net benefit. Did you see this, John and Tom? Nicholas Panerglurtsklou, he came out and said that if it were modestly negative, it could end up being a positive and effective tool, which I thought was really interesting.
That's how it starts, isn't it?
I mean, but that's exactly to your point. I mean, John, this was exactly to your point. And so I thought, not
one
everybody.
More shot, John.
They just dabble with 10 basis points, then they add an extra 10. Before you know it, you're at negative 15. You're talking about tiering.
John, you sound
going
like
down to 75.
You sound like you're writing for the Telegraph. Dana's head is spinning
I just lived this in Europe, and it drove me insane. And I really don't want to go through it again.
But Dana, this is a serious point. Marvin Goodfriend, the late wonderful Marvin Goodfriend, and Kenneth Rogoff say if you're going to do it, do it. They're looking for a much greater amplitude of negative interest rates. Lisa brings up a wonderful idea, which just a little bit will do it. And Pharaoh's aging. John, have a Bloody Mary. Use gin this time. Dana, what's the distance from just a little bit of negative interest rates to the Rogoff Goodfriend? Let's really go all in.
Well, you could imagine that it'd probably be incremental, right? And there probably isn't much difference. Like once you go negative, you can potentially keep going that way. I mean, the clear thing is that you do need to establish a lower bound there. And certainly when we hear from Powell later on today, he might indicate that, well, in the near term, it's not the plan, but he might stop short of saying, I'm completely ruling them out over the longer run.
The only good news, Dane, is Pharaoh's on the lawn overlooking the East River, so he's not going to jump out the window over this conversation.
Thanks for that, Tom. Dana, great to catch up with you.
Dana, thank you. It's great. John, it's a serious question.
Tom,
serious question.
To have a viable economy, you need a functioning banking system. And Europe has shown, and Europe is more dependent on its banking system, and Europe has just battered its banking system by not making sure it was recapitalized in the first crisis. Then in the crisis after that, smacking it around the head several times with negative interest rates. It doesn't work.
Dr. Folkers-Landau at Deutsche Bank would agree with you.
We'll try and get him on the program soon to talk about it. Let's get you some headlines, some news worldwide. Here's Michael Barr.
John, Lisa, Tom, thank you very much. Paul Manafort, President Trump's former campaign chairman, was released from prison to home confinement, according to his lawyer, Kevin Downing. Manafort, who is 71, was convicted of financial crimes and illegal lobbying. He was released this morning from a low-security prison in Loretto, Pennsylvania, after requesting that the Bureau of Prisons move him to his home in Northern Virginia for the remainder of his 7.5-year prison sentence, or at least for the duration of the COVID-19 pandemic. The nation's top infectious disease expert, Dr. Anthony Fauci, warned bluntly of really serious consequences of suffering death and deeper economic damage if state and local officials lift stay-at-home orders too quickly. It comes as President Trump pushes to reopen the economy. Senator Doug Jones said this morning that more testing is needed.
We don't have time to wait. There is a sense of urgency, despite what Senator McConnell said about this next stimulus package. There is a hell of a sense of an urgency with regard to testing, contact tracing, and making sure that we have a quarantine plan in place for when we do see these spikes.
Jones says whenever the president and vice president are out, they need to wear a mask to set an example. Los Angeles Mayor Eric Garcetti says the city needs more testing, even though extensive testing is happening now. He spoke to ABC this morning.
We were the first city in America to offer widespread testing to people with and without symptoms, because we've got to find the silent spreaders that are amongst us as well.
The shutdown on New York's Broadway has been extended again, at least until early September. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa, Tom.
Michael Barr, thank you. The chairman of the Federal Reserve, 17 minutes away. We'll be taking that address and the Q&A session with Adam Posen right here on Bloomberg Radio. Ahead of all of that, futures just taking a little move lower. Still positive on the session, but off the highs, up 15 points on the S&P 500 and positive 0.53%. From New York this morning, good morning to you all. Alongside Tom Keene, I'm Jonathan Ferro. Together with Lisa Abramowitz, this is Bloomberg Surveillance Live on Bloomberg Radio.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Some possible signs of life in the housing market, although it is a bit tricky right now.
We're starting to see an uptick of showing activity. We're starting to see people come out. We're starting to see a floor of volume.
Mauricio Umansky is founder and CEO of the agency. It's a luxury real estate company on the West Coast, and Umansky says people do seem especially interested in moving out of cities into more remote parts of the country right now. And Umansky says he is even seeing that sentiment among typically city-loving millennials.
You know, all of these millennials that were renting and Ubering, and it was all about just being mobile, sharing a kitchen and sharing a living room and, the micro living. I definitely think we're going to start seeing a big difference and change in that, where that human behavior is changing.
Umansky does say that right now, though, it is a struggle for buyers and sellers to agree on appropriate prices for some properties. And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our number one priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
Connecting decision makers to a network of...
Just this wall and that one to do, Dave, and then we're done. Whoop! Oh, no!
Hello, Steve the Sparky.
Pass us that roof tile, Chris.
Yep, sure. I'll be fun.
Oh, no! Oh, phew.
Saved by the gutter!
Built to rough it with contractors. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
Hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures rising, pointing to a rebound after yesterday's late slide. Traders preparing for remarks this morning by Fed Chairman Jerome Powell, who may offer some fresh clues on the outlook for the world's largest economy and for monetary policy. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 15 points. Dow futures up 119. NASDAQ futures up 74. The DAX in Germany's down 1 1/3%. 10-year Treasury up 7/32. Yield 0.65%. Yield on the 2-year 0.15%. NYMEX crude oil is up 0.7% or 19 cents at $25.98 a barrel. COMEX gold is up 0.7% or $12.70 at $17.1950 an ounce. The euro 1.0877 against the dollar. British pound 1.2316 and the yen's at 106.89. Chairman Powell speaking in about 12 minutes from now. We'll bring his comments to you live right here on Bloomberg Radio. And Saudi Arabia and Russia see signs that oil demand is recovering and are confident that their OPEC Plus allies will implement their production cuts in full. The joint statement from the two leaders of the producers group, which just last month were engaged in a destructive price war, signaled they were serious about mitigating the unprecedented collapse in oil demand and prices due to the coronavirus. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. He is an admiral. He is out at sea. Of course, that magisterial story of his first time coming out of San Diego into the Pacific Ocean, I believe that was in Sea Power. The new book, Sailing True North, stories of admirals. No admiral. I can't imagine Rickover in a pandemic, housebound, as Stavridis has been over the last few days. Admiral Stavridis, you're out on Instagram with painful photos, I say, of being housebound. How's it going at home?
It's going fine. You know what admirals do when there's a lockdown is we practice our admiral skills by playing the game Battleship, Tom, and that's gone very, very well. I've won a whole series of those.
Yeah.
No, I guess like all of us, I'm doing about 80% of normal, just doing it on the phone and video and so forth. It's fine.
Right. Admiral, an important question. This nation has soldiers in duty, sailors at sea right now, and we hear the stories of the illnesses on board these ships. You've been on those ships during other illnesses. How do you, as a command officer on one of these ships, contain a virus?
Yeah, let's get it in perspective. So think about your kitchen. Let's say you live in the suburbs. You have a modest but okay kitchen. Now picture your kitchen with 15 people living in it. That's what a berthing compartment on a Navy warship looks like. So, Tom, you're not going to social distance. So what you've got to do is test constantly, If you have the coronavirus test kits, great. If not, you're going with temperature and symptoms. As soon as you see somebody, you isolate them. You probably have a birthing compartment where you keep all the people who are suspected. You test them, you get them off the ship. That's the only thing you can do. Social distancing won't work.
Admiral, I'm wondering what the world is going to look like after the pandemic is over. I'm not the only one. I've heard Richard Haas and Ian Bremmer talking about how the distraction of the pandemic is allowing some sort of rogue nations to accelerate programs already in effect. How destabilizing do you think that type of activity will be? Is it something you're watching?
It is indeed, and I talked to both Richard and Ian quite a bit. We're good friends and are fairly aligned in our views. China is going to take advantage of this moment. They're coming out of the turn faster than the United States. They'll use it to implement the One Belt, One Road geoeconomic strategy that they were already pursuing. They'll put more pressure on Hong Kong, more pressure on Taiwan, more aggressive activity in the South China Sea. The other two to watch are the usual bad boys. It's North Korea with Kim. Unfortunately, the rumors of his death were greatly exaggerated. As Mark Twain said, he's back on station. He'll continue to be difficult. And, of course, Iran, despite having a terrible coronavirus outbreak themselves, we see them harassing our ships in the Gulf. So look for them to take advantage of distraction. And here's their hope, and I'll conclude with this. They want to push the United States toward departing the international scene, toward isolationism, toward coming home. That would be a terrible mistake for us.
Do you think that the signs are that that is the path that the United States is going, or do you get the sense that the U.S. and Europe in particular are coming closer together as they join forces to try to fight the pandemic?
I think all bets are off until we get through the election, Lisa. So for the next 6 months, we're going to be very absorbed internally as that unfolds. After the election, I am hopeful that we will avoid the dire history of the 1920s and 30s when we had a pandemic, Spanish influenza. We had the rise of fascism. We ended up in the Second World War following the Great Depression. We ought to be able to learn from those lessons that we can't simply retreat back here to Fortress America. We need to stay engaged in the world.
Admiral, one final question. And with all that's going on with China and the United States, we forget that there is an island, there is Taiwan, and even more importantly, off of Taiwan, there are other islands as well, Dongsha Islands. And, you know, maybe they're not on the map, maybe they're artificial, there's a whole battle here, but there's real reports that the Chinese may advance toward these littler islands. What do? Show the flag?
Indeed. I think at that point, our best bet is to continue our show the flag U.S. Navy. We call these freedom of navigation patrols. But, Tom, the real lever is closer military cooperation with Taiwan. That is what China wants to avoid. We can use that as a lever to push China back. The little islands, Quemoy, Matsu, and others are indeed targets of China. This is going to be a flashpoint going forward.
Very good, Admiral. Thank you so much. There's a series of books out by Admiral Stavridis, folks. I'm going to be as clear as I can. Start with the Leader's Bookshelf. In it are 45, 50 books or so, and you'll find some jewels in there to help you get through this pandemic. Admiral, thank you so much. Lisa, we've got to jump forward to what we're going to see in 6 minutes from Chairman Powell, from Adam Posen, the Peterson Institute. Lisa, what will you look for?
I think Priya Misra nailed it, which is it's not good enough for Jay Powell to come out and just say, read my lips. We're not going negative. He needs to provide an alternative, and it's unclear how much further they can go. I mean, are they just going to say we're going to expand our balance sheet to $20 trillion? Is that going to be enough? Is it going to say yield curve control? I mean, that's kind of what people are pricing in already. So really, the onus is on him to provide a roadmap for the next 6 months of the actions that the Federal Reserve is willing to take.
Yeah, the roadmap part's fascinating because, you know, the old line, when the facts change, Chairman Powell will change. I'm not sure he knows what the facts are to tomorrow's jobless report. I mean, the claims report tomorrow, Lisa, it's an assumption it's a better number than the ugliness of the last number of weeks. Can we assume that?
People are expecting the numbers to get worse. The question I have is, how does the Fed draw a line between liquidity and providing that to markets versus solvency and backstopping companies that might otherwise go bankrupt? That is a very hard line to draw.
And I should point out, folks, we're really there with the bankruptcy. Bloomberg News has a whole team of people truly expert on going through those documents. Look for those headlines for Global Wall Street. Please stay with us. Coming up, Chairman Powell with the Peterson Institute. This is Bloomberg.
Have you wanted to...
Just this wall and that one to do, Dave, and then we're done. Whoop! Oh, no!
Hello, Steve the Sparky.
Pass us that roof tile, Chris.
Yep, sure. I'll be fun.
Oh, no.
Saved by the gutter.
Built to rough it with contractors. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Get your cook on with Asda. With Butcher Selection quarter pounder beef burgers, get a 4-pack for just £2.28. And salmon fillets, get a 2-pack for only £2.97. So dinner's always a winner. At Asda, we're committed to low prices every day on the quality products you need. Asda. Selected stores online, subject to availability.
While most of us are looking out for each other at this time, sadly, fraudsters are trying to take advantage of the situation. Here's Chris Ainsley from Santander with advice for keeping your money safe.
Phishing emails are designed to trick you into giving away personal details. Messages might be about travel refunds, delivery tracking, or supermarket vouchers. Remember, never click on links or attachments in emails received out of the blue.
For more advice on keeping your money safe, visit santander.co.uk.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Sports and festivals on hold. Weddings and christenings on hold. Marathons on hold. But not everything is on hold.
My name's Lynn, and I have terminal cancer. I don't know how many weeks I have left.
In this time of national emergency, Marie Curie nurses and hospices are needed more than ever. We can only care for dying people like Lynn if you donate. Visit mariecurie.org.uk to donate to our emergency appeal.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spittin' Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, you know, just
carve up the ice with NHL at the rink.
The other day, I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with the Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now. Like, all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn.
Losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeart Radio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
There's no other way to say the world economy is in awful shape.
Whether it's a few months or 18 months, eventually it will come to an end. The economy will revive.
Finance.
Many people take the Fed to task. I think the Fed should be applauded.
We only have limited tools. It's up to the fiscal authorities to do something about it.
Investment.
In a couple of years from now, things are going to be back to probably where they were at the very beginning.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Bloomberg Surveillance, always brought to you by Cohn Resnick. Advisory Assurance Tax. Get breaking tax, legislative, and business insights for financial firms. Cohn Resnick. Cohn Resnick, always ready to help. Visit their Coronavirus Resource Center today. CohnResnick.com/COVID-19. Paul, important headlines from the Fed.
Crossing the Bloomberg terminal right now, Tom. Chairman Powell with some comments out ahead of his speech in just moments. Mr. Chairman Powell saying the outlook is highly uncertain and downside risks are significant. So as a result, Chairman Powell saying more fiscal aid may be worth the cost to limit lasting harm to the economy, and it says the virus raises concerns of long-term economic harm. So really laying the groundwork there, Tom, for some more fiscal stimulus, and also saying that the Fed will use tools to the fullest until recovery underway. So kind of pulling out the big guns.
A very important speech. Let us go right now to the chairman of the Federal Reserve System.
Worldwide public health crisis, and healthcare workers have been the first responders, showing courage and determination and earning our lasting gratitude. So have the legions of other essential workers who put themselves at risk every day on our behalf. As a nation, we have temporarily withdrawn from many kinds of economic and social activity to help slow the spread of the virus. Some sectors of the economy have been effectively closed since mid-March. People have put their lives and livelihoods on hold, making enormous sacrifices to protect not just their own health and that of their loved ones, but also their neighbors and the broader community. While we're all affected, the burden has fallen most heavily on those least able to bear it. The scope and speed of this downturn are without modern precedent, significantly worse than any recession since World War II. We are seeing a severe decline in economic activity and employment, and already the job gains of the last decade have been erased. Since the pandemic arrived in force just 2 months ago, more than 20 million people have lost their jobs. A Fed survey being released tomorrow reflects findings similar to many others. Among people who were working in February, almost 40% of those in households making less than $40,000 a year had lost a job in March. This reversal of economic fortune has caused a level of pain that is hard to capture in words, as lives are upended amid great uncertainty about the future. This downturn is different from those that came before it. Earlier in the post-World War II period, recessions were sometimes linked to a cycle of high inflation followed by Fed tightening. The lower inflation levels of recent decades have brought a series of long expansions, often accompanied by the buildup of imbalances over time. Asset prices that reached unsupportable levels, for instance, or important sectors of the economy, such as housing, that boomed unsustainably. The current downturn is unique in that it is attributable to the virus and the steps taken to limit its fallout. This time, high inflation was not a problem. There was no economy-threatening bubble to pop and no unsustainable boom to bust. The virus is the cause, not the usual suspects. Something worth keeping in mind as we respond. Today, I will briefly discuss the measures taken so far to offset the economic effects of the virus and the path ahead. Governments around the world have responded quickly with measures to support workers who have lost income and businesses that have either closed or seen a sharp drop in activity. The response here in the United States has been particularly swift and forceful. To date, Congress has provided roughly $2.9 trillion in support for households, businesses, healthcare providers, and state and local governments, about 14% of GDP. While the coronavirus economic shock appears to be the largest on record, the fiscal response has also been the fastest and largest response for any post-war downturn. Pardon me. At the Fed, we've also acted with unprecedented speed and force. After rapidly cutting the federal funds rate close to zero, we took a wide array of additional measures to facilitate the flow of credit in the economy, which can be grouped into 4 areas. First, outright purchases of treasuries and agency mortgage-backed securities to restore functionality in these critical markets. Second, liquidity and funding measures, including discount window measures, expanded swap lines with foreign central banks, and several facilities with treasury backing to support smooth functioning in money markets. Third, with additional backing from the Treasury, facilities to more directly support the flow of credit to households, businesses, and state and local governments. And fourth, temporary regulatory adjustments to encourage and allow banks to expand their balance sheets to support their household and business customers. The Fed takes actions such as these only in extraordinary circumstances, like those we face today. For example, our authority to extend credit directly to private non-financial businesses and state and local governments exists only in unusual and exigent circumstances and with the consent of the Secretary of the Treasury. When this crisis is behind us, we will put these emergency tools away. While the economic response has been both timely and appropriately large, it may not be the final chapter, given that the path ahead is both highly uncertain and subject to significant downside risks. Economic forecasts are uncertain in the best of times, and today the virus raises a new set of questions. How quickly and sustainably will it be brought under control? Can new outbreaks be avoided as social distancing measures lapse? How long will it take for confidence to return and normal spending to resume? And what will be the scope and timing of new therapies, testing, or a vaccine? The answers to these questions will go a long way towards setting the timing and pace of the economic recovery. Since the answers are currently unknowable, policies will need to be ready to address a range of possible outcomes. The overall policy response to date has provided a measure of relief and stability and will provide some support to the recovery when it comes. But the coronavirus crisis raises longer-term concerns as well. The record shows that deeper and longer recessions can leave behind lasting damage to the productive capacity of the economy. Avoidable household and business insolvencies can weigh on growth for years to come. Long stretches of unemployment can damage or end workers' careers as their skills lose value and professional networks dry up, and leave families in greater debt. The loss of thousands of small and medium-sized businesses across the country would destroy the life's work and family legacy of many businesses and community leaders, and limit the strength of the recovery when it comes. These businesses are a principal source of job creation, something we will need sorely as people seek to return to work. A prolonged recession and weak recovery could also discourage business investment and expansion, further limiting the resurgence of jobs as well as the growth of the capital stock and the pace of technological advancement. The result could be an extended period of low productivity growth and stagnant incomes. We ought to do what we can to avoid these outcomes, and that may require additional policy measures. At the Fed, we will continue to use our tools to their fullest until the crisis has passed and the economic recovery is well underway. Recall, though, that the Fed has lending powers, not spending powers. A loan from a Fed facility can provide a bridge across temporary interruptions to liquidity, and those loans will help many borrowers get through the current crisis. But the recovery may take some time to gather momentum, and the passage of time can turn liquidity problems into solvency problems. Additional fiscal support could be costly, but worth it if it helps avoid long-term damage and leaves us with a stronger recovery. This trade-off is one for our elected representatives who wield powers of taxation and spending. Thank you again, and I look forward to our discussion.
The chairman of the Federal Reserve System here of the Peterson Institute, a virtual meeting with Adam Posen, the president of the Peterson Institute. Let's listen.
Particularly since becoming chair, spoken about the distributional aspects of running the economy hot, of the importance of full employment, And until the pandemic hit, we were getting very close to something that looked genuinely like full employment with some growth in convergence in incomes for excluded groups and growth in incomes for those groups. As you pointed out, it's those least able financially to bear this burden who are being hit right now. So going forward, do you see us as possible to get back to the kind of full employment we had? You've mentioned scarring of workers. How much does quick action now benefit us in terms of the longer term unemployment rate? And also, in the past, sometimes when people talk about hysteresis, you didn't use that technical term, but the long-term damage from recessions to workers and businesses. It's been a two-edged sword. People say we can't get the NAIRU down, we can't get the unemployment down because there's been scarring. Whereas what the Fed, I think, demonstrated in recent years is you should experiment to see how low you can go with unemployment. So when we get through this crisis, how do you see the Fed's role in terms of its mandate on unemployment?
First, let me say it was a great period to watch unemployment decline and continue declining and not see either wage or price inflation move up. And I think we've learned something very fundamental about our ability to associate levels of unemployment with inflation or indeed other imbalances. And I think that's a lesson we'll be carrying forward. It's also been, frankly, we were over the course of the last year or so with our Fed Listens events, we made a series of 14 different events and engaged with different communities all across America, including in particular low and moderate income communities. And what we heard was that this was the best labor market in 50 years or in people's lifetimes. And their strong advice was, please just keep this going. You know, we're feeling opportunity we haven't felt. They didn't feel the first 7 or 8 years of the expansion, but they began to feel that in years 9, 10, and 11. So it was a great feeling. And I think 2 months ago, we were looking ahead at more of that and thinking further healing and further addressing of these issues. So it's particularly painful to see all of that put aside, at least temporarily. And as I mentioned, the numbers show clearly that it's more recent hires and lower paid people who are bearing the brunt of this, although people are suffering all across the income spectrum. So in terms of getting back, I would say that probably over the course of the next month or so, unemployment will peak. And then as we return to more normal levels of economic activity, it's a reasonable expectation that unemployment will start to decline again. And it may decline sharply, but it's also likely to remain well above the levels that we saw earlier this year and all through 2019 and 18, which were 50-year lows in unemployment. So it'll take some time to get back to where we were. I have every reason to think we can get back there. The economy should substantially recover once the virus is under control. So ending with your final question, though, I think it is a major takeaway for the way I look and the way we're looking at the economy now at the Fed, to place probably less weight on real-time estimates of the natural rate of unemployment, because we see that we were able to move down to 3.5% and be there without really any sign of a reaction from inflation or from other imbalances in the economy. So it's a place we can get back to. We will get back to. It'll take some time. The main thing to do is to get on that road to recovery and then just stay on it for a long period of time. And I think that's what I expect will happen.
Terrific. And I want to praise you for, long before this crisis, talking about not having too much faith in the stars and being more pragmatic on the data. Turning to the second main point from your remarks, you, in my view, rightly emphasized the idea that more stimulus, but not just stimulus, more support for the supply side of the economy is needed, and that it will probably have to be fiscal policy, not monetary policy, that does that. In short, that if we cut off fiscal stimulus too small too soon. It's not just a demand issue, it's a supply side issue. That said, there are concerns some people raise about the fiscal policy in the future, even though all reasonable fiscal hawks know we should be spending right now. So the question is, what does fiscal responsibility look like a year or two down the road, or 3, especially if we will still have 10%, 8% unemployment, long-term unemployment? How should we, obviously this is for elected officials to think about, but what kinds of principles would you want them to be thinking about in terms of the recovery of the economy? And what role can the Fed play? When I was at Bank of England, I got into a public tiff with the governor then, Mervyn King. Governor King thought it was the role of the bank and the governor to lecture the parliament about fiscal responsibility. I didn't. What role do you think the Fed has to play in disciplining fiscal policy going forward?
We don't play a formal role in fiscal policy, and it meaning that we wouldn't take a position. I wouldn't take a position supporting a particular bill. I might answer questions that I get privately from members about things, but it's not our role to supervise Congress. It's actually the other way around. Congress, we're a creature of congressional action, and they have oversight over us. But like other Fed chairs through time, I have said things at a fairly high level about getting back on a sustainable fiscal path over time, and I do think that's important and appropriate, just because it's important for the long run good of the economy, which is part of our bailiwick. As I mentioned, it's worth remembering Congress has really moved quickly and with real force here, and appropriately so. This is the biggest shock our economy has felt in modern times, and this is the biggest fiscal response. It is far larger than any fiscal response, and it came very, very quickly. So that's a good thing. The issue is that there's a lot of uncertainty ahead. It may take even just a few more months than we would like for the economy to recover. My colleagues and I have been speaking to a wide range of leaders of not-for-profit, for-profit businesses all across the U.S. economy, all different kinds of businesses. And what comes through is there is a sense that, a growing sense, I think, that the recovery may come more slowly than we would like, but it will come. And that may mean that it's necessary for us to do more. And, the trade-off is this. As I mentioned in my remarks, we know that long periods of unemployment leave a shadow over the labor force and over our economy and over people's lives en masse. We also know that waves of bankruptcies can weigh on economic activity for years. If you think about the small and medium-sized businesses that are really the heart of our economy and the heart of job creation, those are typically, often anyway, the product of generations worth of work to create. And if they avoidably become insolvent just because economic activity doesn't recover fast enough, I think we would lose more than just that business. I think we lose something fundamental, and it won't be able to be replaced, quickly. In terms of fiscal discipline, I absolutely believe that we must, and indeed we will eventually have to return to a sustainable fiscal path, and that just means that you've got to get the economy growing faster than the debt. And have that happen for a long period of time, and gradually reduce the ratio of the debt to the size of the economy. That's how you do it successfully, and many countries have done it successfully over a period of time like that. And I do think the time to do that is during good times. When the economy is strong and unemployment is low, that's the time to be addressing those concerns. I think now, when we are facing, the biggest shock that the economy has had in modern times, is, for me, not the time to prioritize considerations like that. I do think that we can come back to them fairly quickly, which is to say, a few years down the road when the economy is well and truly recovered, or at least mostly recovering.
Thank you for that. Turning to some operational monetary policy issues, of course, all kinds of market people and reporters would love to ask you about negative rates. Mm-hmm. I would like, before getting what I'm sure will be your answer on that, I would like to ask a little more deeply about the thinking behind negative rates in the U.S. current context. So one way of looking at it is, of course, that QE and rate cuts are essentially substitutes. And so that if you can do more QE or all these various credit facilities and interventions to the 4 buckets that you listed, you could always scale that up and not bother with negative rates, which may have negative political effects as well as economic effects. A flip side is that on the other side, there are people who argue negative rates have a particular use in terms of currency valuation, but also, as my colleagues Olivier Jean and Joseph Gagnon have argued, it might enable more QE because it gives you more space. Just broadly speaking, how do you feel about the arguments for and against negative rates in the U.S. at this point?
So, Adam, let me start by saying that the committee's view on negative rates really has not changed. This is not something that we're looking at. We chose not to implement negative rates during the global financial crisis and the recovery, and instead we relied, as you pointed out, on forward guidance and asset purchases when we were at near the zero bound. And we've said that we intend to continue relying on those tools, which are tried and they are now a part of our toolkit. In fact, we revisited this at last October's, just way back in October, revisited this question, and the minutes said that all FOMC participants, and that's not a sentence you get to say very often, all FOMC participants currently did not, that judge that negative rates currently did not appear to be an attractive monetary policy tool in the United States. So I would say a couple of reasons behind that. One is we do feel that our tools work. The tools that we have used, forward guidance and asset purchases, work. We're now doing these 13.3 facilities. We think they work too. So we think we have a good toolkit and it works, and we have evidence that it works. And I think that's what we'll be using. Also, the evidence on the effectiveness of negative rates is very mixed. It's very mixed. There's no there are research that says that they've been effective. There are plenty of doubters. And the issue really is the concern over interrupting the intermediation process and reducing bank profitability, thereby reducing the availability of credit in the economy. So it's an unsettled area, I would call it. I know that there are fans of the policy, but for now it's not something that we're considering. We think we have a good toolkit, and that's the one we'll be using.
Delighted to hear you say that. Let me turn now to another question about your toolkit. So some of the facilities, as you said, inherently what the Federal Reserve does is provide people with liquidity, with loans, with temporary bridges. In the past financial crisis in 2008, 2009, one issue was money was put out through QE, through cuts in rates and other measures, but it didn't get invested in the real economy because, the old Keynesian notion of pushing on a string, because there was great uncertainty, expectations were poor, and so on. What makes you think that some of the facilities that are being made available now will be taken up in a way that and then used in the real economy in a way that they weren't, say, in 2008 to 2010? I mean, will the Main Street lending work if you're running a small restaurant, a small nail salon, and a small tourist guiding business? I mean, God willing, I know you want to help these people, and we would all like to help these people, but those sectors may shrink in the real world. So why do we think they're going to take these loans?
Well, as I mentioned in my remarks, we can address liquidity problems, and that is in fact the problem that many companies find themselves facing. Companies that are really very directly affected by the coronavirus are in a special place. The airline, hotels, some restaurants, and things like that. And really, we will need to see the economy recover fairly quickly for them to benefit from this. But we're in a position where we will lend to companies based on their earnings from 2019, as we've said, And if they qualify, we will lend to them up to that limit. So we're willing to take that risk. So I actually, as I mentioned in my remarks, I think we'll be in a position to help many, many, many companies. And I certainly hope that's the case with these facilities. We frankly have helped already through the announcement effect, where markets have really loosened up and started to function much better than they were just a couple of months ago at the peak of the early part of the crisis, where markets were not functioning well. So we see that, and that's enabled many companies to finance themselves now, and that's a good thing. And it may mean that we actually aren't needed. I think in Main Street, though, those are companies that generally don't have market access, and they will need these loans. We will want to provide them. Let me just say about Main Street. This is for those who don't follow this maybe as closely. This is for companies that have less than $5 billion in revenue, fewer than 15,000 employees. It's probably going to be for companies that don't have access to the capital markets or the syndicated loan market. So these are the great small and medium-sized companies. And it's an incredibly diverse group of companies, very diverse industries and credit needs. And we're trying to create products with Main Street that address as broad a swath of those needs as we possibly can. It's also operationally very complex. People have credit agreements. They've got existing credit agreements. So we have to work through all of that. And we're in the process of doing that. I think Main Street will be able to go live in a few weeks. So I am hopeful that we can meet the demand that is out there. We are committed to continuing to innovate and adapt, as we've shown ourselves willing to do with these facilities. This is completely unique in our history. And so we're learning as we go. And, as we go, we'll continue to be willing to adapt. But I didn't make this point in my remarks. We can make loans to solvent borrowers and to solvent borrowers who don't have access to other private sources of capital. That's just what the law requires of us under 13.3 to make a loan. And as I mentioned, the passage of time is really all it takes to turn a liquidity problem into a solvency problem. So we'll be a big help for companies for a while, but over a longer period of time, it may be that more fiscal help is needed. Now, again, I don't prescribe how, but I just say that it could be costly, but the benefits of it would also be potentially substantial.
Thank you. Another area where you and your colleagues on the FOMC were ahead of the curve before the pandemic was you were putting new emphasis on the effect of events abroad on the U.S. economy, not just the narrow trade role. Maury Obstfeld, you'll recall, did a great paper on that for the June Fed Listens conference last year. I was wondering if you could take us through how you see what's happening in the rest of the world affecting the U.S. recovery right now, and how you see the flight into the dollar, which obviously was enabled in huge ways by the swap lines that the Fed and its partner central banks provided, how that benefits the U.S. economy as well as the world. We are, of course, the Peterson Institute for International Economics, so we think it does matter, but what matters is what you think matters.
Fair enough. The global economy, and even more so the global financial markets, are tightly integrated at this point in time. Over the years, that's become more and more the case. So it is very much in our interest for the global economy to be strong. We need people to buy our exports, and just in general, we benefit from a stronger global economy. In terms of the swap line, so we are the world's reserve currency, and all around the world, people fund economic activities from time to time in dollars. They buy U.S. dollar-denominated credit assets, for example, U.S. mortgage loans and things like that wind up being bought by foreign banks who want to fund those activities in dollars. So there are these dollar funding markets around the world, and they're actually fairly important to the U.S. financial markets and the U.S. economy. They are effectively providing credit to U.S. households and businesses through these dollar funding markets. And you're right, as the reality of the pandemic dawned in a couple of months ago, there was understandably in financial markets a flight to safety. And that meant short maturity, it meant fixed income, it meant dollar sovereign credit at the short end. And that left remarkable, unprecedented levels of illiquidity in a number of markets. And we saw it in the dollar swap markets. We saw swap basis widening and threatening, those dollar funding markets, and also playing a role in what was happening in the U.S. Treasury market, which was becoming highly illiquid and more dysfunctional than we'd seen it. So what the swap lines do is we provide dollars. We swap dollars for a local currency with another central bank, and that central bank faces off against its banks and provides dollar funding to them. So dollar funding around the world. And it had a very constructive effect on calming down those markets and reducing the safety premium for owning U.S. dollars. So it's played a role in supporting return to more normal conditions in global financial markets. More broadly, I think what we've been able to do is to help markets return to more normal functioning, which has the effect of buying time for healthcare professionals, buying time for governments to respond at a time when the financial markets are working, the financial system is working, and we don't have to face dysfunctional markets and the loss of credit availability, for example, to companies and households. So those measures, both the swap lines and the facilities that we've done, have really, I think, been somewhat effective at achieving that.
Thank you so much, Jay. We're out of time, and you obviously have a world to continue to save. I just want to express my admiration for what you, the FOMC members, and the whole team at the Federal Reserve are doing. You're providing competence, calm, concern for the right issues, and nonpartisan fact-based work at a time when we need it. Thank you.
Thank you very much.
Adam Posen of the Peterson Institute. Of course, the Institute, Fred Bergsten, the founder, just a terrific international think tank in Washington. Dr. Posen came in after service with the Bank of England. He mentioned that in his comments with Chairman Powell, and has really driven forward their research. Just as one idea of their work, Jacob Kierkegaard on Europe and Nick Lardy on China as well are two of the experts they have. There's a gentleman by the name of Blanchard that once in a while speaks on economics as well. Today, Chairman Powell speaking in a virtual meeting to the Peterson Institute. Dr. Posen, suit and tie, not in his living room, formally at the Peterson Institute. And Chairman Powell, of course, very formal as well. Paul, I like the headline from Bloomberg, which sort of encapsulates the careful terrain that Chairman Powell went. Stock slide, investors spooked by Powell warning. If I get over here on my Bloomberg terminal on the cell phone, which, folks, I will be blunt, is a miracle, with the markets open and only open for 3 minutes. The Dow negative 119 and the VIX 32.16. Paul, what do you see?
So, definitely a concern about the longer-term impact we heard from Chairman Powell, so we'll have much more of that coming forward, Tom. This opening bell is brought to you by SEI. Crises emphasize character and partnership. One mission, one community, SEI. Go to SEI.com/IMS. Let's get a data check with Karen Moscow right now. Karen, what do you have for us?
All right, Paul, thank you. Well, the S&P 500 is lower at the open, as you said, down about 0.5%, down 13 points at 2857. The Dow Jones Industrial Average down 0.6%, 143 points at 23,618. And the Nasdaq is down 0.1%. It's down 11 points at 8990. 10-year Treasury up 230 seconds, yield 0.66%. The yield on the 2-year 0.16%. NYMEX crude oil is up almost 0.1%. It's little change now, up 1 cent to $25.79 a barrel. COMEX gold is up 0.33%, up $6.10 at $17.1260 an ounce. The euro 1.0866 against the dollar. The yen is at 107.02. Paul.
Thank you very much, Karen. We appreciate that. Right now, let's get a sense of where the real action is here as we open up these markets. Bloomberg Stocks editor Dave Wilson. Dave, what do you have for us?
Well, Paul, it is a fairly broad-based decline we're seeing in early trading. All 11 of the main industry groups in the S&P 500 are lower. energy and financial stocks leading the way. A couple of notable declines. You've got Coty down about 7.5%, biggest drop in the S&P 500. The cosmetics maker has been falling all week, even with this deal to sell their professional beauty business and hair care brands, at least the majority stake in those units to KKR. It's just a stock that's really kind of taking a hit here. Another one that jumps out is Salesforce.com, which is down about 5.5%. They just named a new president and chief revenue officer, Gavin Patterson, who'd run their international operations. So that one jumps out as well. In terms of what's higher, well, we can note JCPenney's up 37%, but then again, the shares are only at 27 cents each. The department store chain is in talks to borrow $450 million as part of a possible bankruptcy. That's according to CNBC, citing unnamed people familiar with the matter. They said Penny may get just half the money up front and the rest later if they meet certain financial targets. You got Grubhub down about 5%. Those shares jumped 29% yesterday. We reported, based on people familiar with the matter, that Uber Technologies, which of course has Uber Eats, a direct competitor of Grubhub, is trying to buy the company, that they're in talks. Uber shares, by the way, down about 0.75%. Royal Caribbean's another one that jumps out. It's down about 3.5%. They're selling $3.3 billion of notes privately, mainly to paying off a bank loan received in March. There's a lot of financing going on here, for sure. You've got Roku down about 3.5%. The streaming video company playing a share sale. Zillow Group, which actually went through with a sale that was smaller than they anticipated, down about 4.5%.
David Wilson, thank you so much. Paul Sweeney and Tom Keene, good help there from Karen Moscow and David Wilson. Here with a market that has gone negative 100 down to negative 281 in the Dow, 23,480. SPX down 30 points. The VIX comes back a stick, 33.87 on the VIX. Let me look at the yield market here very quickly. Really moving even since Karen's report. 2-year yield flat, 0.1589. 30-year bond comes in. I'm going to round it out 2 basis points, 1.35%, and gold up $5 as well. Cameron Christ with us, a gentleman with 3 Bloomberg logins. He has 12 screens at his home, taking up the entire living room. And Cameron Christ joining us here with the dynamics of the markets as well. Cameron, from where you see in the bond market jostling around with the economic data, are we beginning to price in a true disinflation?
Well, I mean, obviously, yes, because the yield of everything is very, very low. It's so difficult to tease out what's really going on, even from the official data, right? I mean, obviously, CPI yesterday said, the worst core reading ever, but that's based on a static set of weights, right? And how much apparel did you buy last week or last month? I didn't buy any, right? So does it really matter if the price of apparel went down? The stuff that I bought, food at home, that went up 2.6%. They didn't even have an adjusted reading for toilet paper and paper products, maybe because they went to the shop and they couldn't find any. So listen, is there going to be some disinflation as it's measured? Absolutely. Do we know exactly what the world's going to look like in 3 years? No, because we don't know what supply chains are going to do. I mean, yes, we can focus on the demand side, but there's also a supply side issue here. And it seems likely that supply chains are going to change in a way that increases the marginal cost of production.
So, Cameron, just listening to Chairman Powell here moments ago, he seemed to put the kibosh on negative rates. Is that something, how do you think that will develop over the next several months?
Well, it's going to be very interesting because the analogy I use for the Fed last year is they were basically the puppet dancing on the string of the market's whim. Think like the cover of The Godfather, with the marionette string. Ever since the taper tantrum, the Fed has been pretty loath to really disappoint market expectation. But On this one, they seem to maybe to be growing a bit of a backbone here, because my personal opinion is that negative rates would be an absolutely terrible idea. But we might have to see the Fed demonstrate that actually this is a red line that we're not going to cross, and they've shown little ability to draw that line and to stand by it over the last
Cameron,
couple of
I don't
years.
mean to interrupt, but this is brilliantly spoken. Cameron, you're such a student of history, and that whether it's the Hunt brothers in 1980 on silver or other moments where institutions have to tell markets what to do, how does the Fed affect a demonstration of no, we're not going there?
It's tough, right? Because we've just had Powell say, "Well, it's not something we want to do." It kind of is going to depend on what the market itself does, right? Because the market's pricing negative rates of 2 basis points. That's not that big a deal. If the market starts pricing a full minus 25,
exactly, Cameron,
then we're going to need to see forward guidance, all the dots. Positive.
Come on, Chairman Powell. Chairman Powell, you're going to still be at your 3 Bloombergs with your 12 screens in your living room. Chairman Powell is going to get some economic data starting with a 20% unemployment rate. The facts are going to change, and the bond market will move. Then how do they demonstrate?
Well, the easiest thing to do is raise the IOER rate, which would push the effective Fed's rate further above zero, right? And then the idea that charging banks to hold money or charging savers to hold money is somehow going to stimulate the economy it's nonsense. It's absurd. It's essentially a tax increase on the financial system. How is taxing the financial system supposed to stimulate economic activity?
Hear, hear.
Well said. Cameron Kreis, thank you so much. Too short a visit. We got to do this again soon. With our news in New York City, here's Michael Barr.
Tom Paul, thank you very much. President Trump's former campaign chairman has been released from prison. Paul Manafort will serve the rest of his sentence in home confinement due to concerns about the coronavirus. Manafort, who is 71, was released early this morning from federal prison in central Pennsylvania, where he had been serving time for tax fraud in a case brought by then special counsel Robert Mueller. Manafort's attorneys had written to the Bureau of Prisons last month requesting a transfer to home confinement. When it comes to letting healthy people return to the workplace, initial studies are showing encouraging results for people who have recovered from COVID-19. Bloomberg's Martin DeCaro reports.
Early antibody studies bode well for former coronavirus patients.
These antibodies that we think are the protective ones, the one that will keep you from getting reinfected.
Dr. Andy Pekos teaches molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He says we still don't know how long any immunity will last.
If they last for 6 months, 12 months, then we'll be in a very different situation than if they start fading away within 2 or 3 months.
And those studies will necessarily take months to be conducted. Martin DeCaro, Bloomberg Radio.
Authorities in Wuhan, the Chinese city where the first known coronavirus cases broke out, have reportedly launched a plan to test all 11 million residents in the next 10 days. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom Paul.
Michael Barr, thanks so much. Down negative 220, SPX negative 22. Let me give you those levels. 23,542 on the Dow, the SPX under 3,000, 28.48. The VIX backs up 33.67. Please stay with us worldwide. This is Bloomberg.
I go to bed feeling the same way. I ain't nothing but tired.
This is a Bloomberg Pursuits look at luxury. Sotheby's is looking to cash in on 2 pandemic trends, online buying and nostalgia for Michael Jordan. In March and April, Sotheby's had 32 online sales generating $60.4 million. And now the company is offering an autographed, game-worn pair of Nike sneakers from Jordan's glory days through May 17th, estimated to fetch as much as $150,000. The legendary athlete is hotter than ever following the recent release of The Last Dance, an ESPN documentary series. while one sneakerhead spent almost $500,000 at auction for a pair of Nike's Moon shoe last year. Other wealthy collectors are snapping up art from online viewing rooms as the pandemic shuttered the physical ones. The volume is nowhere near what it typically is, but with about a third of 236 international galleries not expecting to survive the crisis, online art viewing rooms are helping stave off the bleeding, at least when it comes to established artists. I'm Ed Girote, Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Global news.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are falling after Federal Reserve Chairman Jerome Powell said the outlook for the economy is uncertain and the downside risks are significant. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P 500 is down 0.6% or 16 points at 2853. The Dow Jones Industrial Average down 0.8% or 185 points at 23,580. And the Nasdaq's down 0.1% or 10 points to 8991. 10-year Treasury up 4/32, yield 0.66%. The yield on the 2-year 0.15%. NYMEX crude oil down 0.2% or 4 cents at $25.74 a barrel, and COMEX gold up 0.5% or $8.80 at $17.1570 an ounce. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. Leadership is always interesting, and is particularly interesting during a pandemic. It is most important now to get the messages, the experiences that people are facing during this pandemic. David Rubenstein has been doing this. He does it with Adina Friedman of the NASDAQ. A good conversation about what Adina Friedman is doing now. Let's listen.
Do you think you really need to bring all your people back into the offices because it seems to be working pretty well right now? Or do you think that a lot of people may not want to come back in the offices because they're afraid of traveling to the offices, or they're just comfortable working at home?
And it's a great point, David, because we did a survey of every employee to ask them what is their comfort level to come back under certain conditions and based on the status of different cities where we operate. And we have some employees who are eager to come back, but the vast majority of the employees want to continue to wait and see how things progress in the cities where they operate before they come back. We have the luxury of patience. We have the ability to work from home very effectively. So we will ask people if they want to come back voluntarily and they feel they can do it in a safe way. Then we would like to start to reopen offices to give them that flexibility. But we then will put a whole lot of protocols in place inside the offices to make sure that they stay safe while they're there.
Adina Friedman of the NASDAQ, Paul Sweeney and Tom Keene with David Rubenstein as he drives forward the conversation with his wonderful series. on Leadership Live. David, the fabric of this city, how is it going to change? You are a great student of this. You have been involved in commercial real estate transactions. You've been involved in the distinction between goods transactions, essential goods, foods, and medical performing services. And also, as Ms. Friedman speaks of, the service sector. How will the service sector change?
It's clear over the course of history that humans' greatest desire is to live, and then to reproduce, and to have their children live and be healthy. And I think people are not going to take chances going back to work so quickly if they think their lives or maybe their children's lives will be at stake. So I think people are going to come back to work much more slowly, and people have learned they can work from home just as well, maybe in some cases better. So I think you'll get a reversion to the mean over several years, but not right away.
So, David, as you were discussing with Adina Friedman, again, the CEO of NASDAQ, we've seen a tremendous amount of volatility in the financial markets. David, how has Adina said that the NASDAQ has dealt with this, again, given that much of their workforce is kind of working from home?
Well, they are a high-tech company, and as you know, they're an electronic exchange, so they never really needed people on the floors to run around and exchange trading orders. So they're pretty well equipped to do this. I would also say that their company has done well. In fact, their stock is up because there's a lot of trading going on. Markets may be up and down, but they make money whether the markets go up or down. But actually, NASDAQ has the 5 biggest tech companies in the world, or at least certainly the United States, on their exchange, and therefore those companies are doing quite well. Amazon, Microsoft, Apple, and so forth.
David, you go down that river in Pittsburgh where the rivers meet, and there is Alcoa. And Paul O'Neill, I'm going to give him huge credit for the modern service sector floor, the cubicles, the spread out thing. Carlisle lives this. You guys have done this so many times, so many transactions where you have to deal with labor space, labor dynamics. Are the days of the cubicle done? Are the days of packing people in? You've got a synergistic guy going, right. We need them 8 feet, 3.2 inches apart. Is that just gone?
Well, there are 2 phenomena that are going to go forward. One is that there will be cubicles, but they will have more protection so that people can't be breathing on other people so readily. And secondly, fewer people will be living and working in the cubicles because fewer people are going to come back to their offices. Many people are going to be content to work at home or remotely. So you'll have fewer people, in my view, and those people that do work in cubicles will be better protected.
Yahoo! I remember one day a CEO at Yahoo walked in and said, this working at home stuff isn't working for productivity. She had the courage to change it around. What is your experience, David Rubenstein, of people working at home? Is it efficacious?
It is efficient if you don't have a lot of young children running around that you have to take care of. If you've got young children running around and you don't have a lot of help, it can be difficult. If you're my age and your children are out of the house, it's not that difficult. So that's a big difference.
So, David, it's interesting here. I think, a lot of companies are trying to figure this out here. A lot of companies, I think they're probably learning that their efficiency, their productivity is probably better than maybe they initially thought of when they thought about working from home. I mean, how do you think that's going to play out?
I think companies are surprised. When I ask CEOs on the show, Leadership Live, what they're most surprised about, it is that their companies have worked quite well remotely. What I think is going to happen is you'll see more people doing it remotely when their colleagues are going back to work. More people will stay at home than they would have otherwise thought. And secondly, I don't think everybody will be brought back to work. In other words, I'm not sure 100% of all employees are going to be rehired or kept, just because I think people will realize that sales will be slower for a while, and I think profitability will be lower for a while, and I don't think everybody will come back to work in the same job they had before this crisis.
David, thank you so much. An important conversation with Adina Friedman, NASDAQ CEO. Look for that Friday. This will be 9:30 p.m. on Bloomberg Television. David Rubenstein, Leadership. live. Right now, we've had the leadership of Chairman Powell adjusting the conversation as the chairman of the Federal Reserve System can do, and he has decidedly done that today. There was a point where we had some nice green on the screen. We've reversed that off futures to red with the Dow negative 219, S&P 500 up 19. And, of course, folks, the NASDAQ 100, the tech-heavy that David Rubenstein mentioned with the NASDAQ. I got to say this to Paul 8 times to get in a plug for Adina Friedman. The NASDAQ composite has the subdegree, the NASDAQ 100, which is made up of what, Paul? 100 stocks, and 4 of them make 82% of the market cap. The NASDAQ 100. For Adina, let's give a complete quote. 9,121, up, 9 points, 0.1%. That was on the NASDAQ 100. Red for the others, but the NASDAQ 100 is green. David Rubenstein, Adina Friedman, look for that. Leadership Live. We are produced by Colin of the Twins. This is Bloomberg.
Why do hedge funds and other alternatives...
Introducing the new single, Impossible. From Central American rock and blues trio, Steady Rolling. Their epic story of love and loss continues. Download and stream the single, Impossible, from the band Steady Rolling, wherever good music lives.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the coronavirus job retention and self-employment income support schemes. For information, go to gov.uk/business-support now.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £63 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 21st of May to play in the June draws. PPL manage lotteries on behalf of good causes 16+. Conditions apply. Play responsibly.
A half-price dream holiday, wouldn't want to miss that. A takeaway for free, wouldn't want to miss that. And 30 gigs data for just £10 a month on Smarty Mobile. You definitely don't want to miss that. Our Smarty SIM comes packed with 30 gigs of data and unlimited calls and texts for just £10 a month on a 1-month plan. That's why Smarty won Best Value SIM-only network in the U-Switch Mobile Awards 2020. Don't miss out. Search Smarty Mobile. Smarty. Simple, honest mobile. Smarty.co.uk.
Picture in your mind a stylish Audi with striking LED headlights, sporty alloy wheels, and some of our most advanced features, including a 10-inch digital cockpit and smart assistant systems like lane departure warning. Picture what that Audi looks like. Now think smaller. The Audi A1. It's not a small car, it's a small Audi. Visit audi.co.uk. Audi. Vorsprung durch Technik.
For more than 20 years, Asda supported our communities. We've raised over £23 million for Fair Share and the Trussell Trust. And recently, we've donated supplies to frontline NHS workers and carers. We've always been proud to serve those around us. Visit asda.com/creating change for better. Asda, we're all in this together.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
The Fed action, essentially unlimited quantitative easing.
People have had the rug pulled out from under them overnight.
This could be a lower for longer hit.
The economic news seems to be getting worse.
Worse.
Breaking market news and insight from Bloomberg experts.
It's possible that this is going to be a scarring recession.
The Fed is really showing that they're doing whatever it takes.
A lot of people don't expect that the economy will reopen in full.
This is really hitting industrial America, and it's a major crisis.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Wednesday morning from New York City and points beyond to our worldwide audience. Coming up, we're going to take a look at the benefits of private equity in a volatile market. Plus, we're going to dive deep into Jay Powell's comments from earlier this morning with Neil Dutta, head of U.S. economics at Renaissance Macro Research. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
The stocks are off, Paul. This after Federal Reserve Chairman Jerome Powell said the outlook for the economy is uncertain and the downside risks are significant, especially as it has to do with employment.
A Fed survey being released tomorrow reflects findings similar to many others. Among people who were working in February, almost 40% of those in households making less than $40,000 a year had lost a job in March. This reversal of economic fortune has caused a level of pain that is hard to capture in words, as lives are upended amid great uncertainty about the future.
We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is down 0.5%, down 13. The Dow is down 0.75%, down 175. And the NASDAQ is up 0.1%, up 12. The 10-year is up 4/32 with a yield of 0.66%. West Texas Intermediate crude oil is down 1% at $25.53 a barrel, with COMEX gold up 0.3% at $17.1190 an ounce. The dollar yen 107.06, the euro $1.863, and the British pound $1.2268. That's a Bloomberg Business Flash. Bloomberg Markets is underway with Lisa and Paul.
Thank you so much, Greg Jarrett. Let's just sit on that for 1 second, what Fed Chair Jay Powell said. Among people who are working in February, almost 40% of those in households making less than $40,000 a year had lost a job in March. And that gloomy tone really was prevalent throughout Fed Chair Jay Powell's speech. He definitely was looking at the potential for a significant downside risk, insolvencies in particular, among small businesses. Dave Wilson, Bloomberg stocks editor, joining us now. Let's take this over into equities, where we do see a bit of a risk-off tone, but I want to focus on that small and mid-cap sector, which a lot of people are looking at for some sort of indication that perhaps the worst is over. We are not getting that indication yet, are we, Dave?
No, we sure aren't, Lisa. I mean, you've got the Russell 2000 index down more than 1%. Not an extreme move by recent standards, but when you consider the S&P 500 is only off about 0.4%. Smaller companies are again doing worse here. And let's put that in some context. I mean, you've got the Russell down more than 24% this year. The S&P 500 is only off 11.5%. So what we're seeing today is what we've really seen all year. You know, the smaller companies taking bigger hits. I suppose concern about what their business is going to look like once we get out from under the worst of the pandemic here, whether they're going to be able to deal with the financial hits they're suffering, whether they're going to be in a position to get the financing they need. It's all about financing, it seems like today, you know, between bond sales and share sales. They kind of dominate the market landscape a bit here. And so really, you know, the smaller companies definitely are faring worse once again.
Yeah, Dave, it's interesting you bring up the financing. I'm just looking on the Bloomberg Terminal. Interesting story. Casinos and cruise lines and even Live Nation, the live event promoter, companies that have really been hit hard and maybe the hardest by the economic impact of this pandemic are finding, you know, a lot of reception in the high-yield market.
Right. I mean, you've got Royal Caribbean selling $3.3 billion of notes privately. So they're going straight to investors with them, refinancing a loan they got in March. That's where most of the money's going anyway. And, you know, you've seen some fluctuations in the shares. They're down about 1.5% at the moment. They're faring better than their peers, though, when you consider that Carnival and Norwegian are both off 4.5% or so. It's just a matter of, at this point, you know, given what's been going on in the Treasury market with yields coming down, it's sort of that age-old kind of argument that, you go for yield where you can get it to some extent, and people are willing to take the risk, at least some of them are, of lending money to these companies whose business has really been shattered, for the moment at least, by the coronavirus, in the hopes that they'll be able to, kind of come around and keep up the payments.
Yeah, and just to be clear, this is expensive financing for some of these junk-rated companies coming at double-digit yield. Some of them, the Boyd Gaming one coming at an estimated 9% currently. Another bond offering that I thought was really interesting was Uber Technologies bringing $750 million of bonds after reports that they were interested in buying Grubhub. And some people view this as a positive. People were looking for consolidation in the food delivery space and sort of the scale being the key component to survival. At the same time, it also points to a world of hurt for Uber, as people just don't take cars anywhere anymore in the same way that they did before the pandemic, Dave.
Yeah, that's it. I mean, you put it all together and you can understand, why they would need to go to the markets. And they've even talked about how they figured that they would end the year with billions of dollars. So it wasn't like a distress situation from the way they presented in the past, as it has